an overheated economy?
We're here. We're doing it right now. But let me explain. I mean, we're already seeing it right now where the economy isn't overheated. I mean, some of the things associated with inflation, we know it has to do with tariffs. It has to do sort of this temporary spike in oil prices, and so we do expect to see the disinflation trend continue. When we look for CPI next week, we're looking for about 2.5% increase on CPI. We think that this is an economy that can grow in a 2% range, and so I wouldn't put that as an overheated economy. You also have a labor market that is not re-accelerating. It's sort of, yes, the unemployment rate seems to be stabilizing around 4.2, 4.3%. You're not seeing wage growth pressure. So you do have an economy that is moderated, or it's slowing down, it's not overheated. And what's driving the earnings growth is really, one, we know the capex coming through from tech, but also the fact that you're now seeing a cyclical pickup, improvement in PMIs as you have clarity around, tariff policies and some other pent-up demand that's actually now being solved for. And we heard that from the industrial companies, that is not only short cycle, but also you're seeing improvement in terms of aerospace and defense, transportation, also related to the data center build out. So I think it's all a combination of that, and you have an economy that's healthy, that's not overheated.
Nadia, does it give you pause that the Bank of America sentiment gauge hit the most extreme bullish level since 2021?
Well, I'm not surprised by that, because there are a lot of reasons to be bullish that we just talked about in terms of the fact that you have, 7 consecutive quarters.
But if everyone's lined up on one side of the boat, does that make you a little bit nervous?
I wouldn't say everyone is lined up on that side, because this is despite the fact of what that specific survey they say. And you've seen that.
I liked Chris Verone's response to this. You need bills for a bull market.
Yeah, exactly.
Stocks are going up.
Yeah, but look at it. Look at some of the positioning in the unwinds that we've seen also as well. That hasn't fully been reloaded, right? So I don't think that there's broad-based, overly bullish. There are a lot of bearish.
Nadia, that's of interest to people. Can I jump in? Just how much we cleaned out leverage through the month of July? How much of a reset we actually have? What are your views on that? How do you gauge where we are?
I think that it feels like a lot of that unwind is behind us now. You're already seeing some recovery in the names that have been affected. Could you see another leg for continued volatility in the next couple of months? Yes, you can, but I think a lot of that is now behind us. We ourselves, in terms of our positioning, we had taken down 70s quite a bit over the last month or so, starting in June, because we were a bit concerned about how fast that they rally. We still believe in the fundamental AI story, but what we're trying to send through to our clients and in our portfolio is the need to be selective and diversified across the AI space. So I think it's from here on out, it's more selectivity. You're seeing it in even some of those earnings results this week, that the bar is quite high, right? And so companies not only have to deliver on the earnings, but also the outlook, and also show that sustainability of the margins, particularly around the AI trade.
You crushed it with that call. Just finally on the jobs data, 20 minutes away. How relevant is the jobs data this morning?
It is relevant from the sense of the unemployment rate and wage growth, right? But it's not the only data that matters next week. CPI inflation will matter, of course. Obviously, we're all watching it closely because we're still trying to figure out what the Fed reaction function is. And so, if you see a tick down in the unemployment rate, we know payrolls get revised all the time. So unemployment rate, then that's an argument that helps support the more hawkish side of the Fed, like the Kashkaris of the world, that believes that we should be on a path to moving interest rate back up higher. Or, if you see a sort of stabilization, then, maybe you're supporting the Williams of the world,
right,
who sort of said policy is well positioned. So I think that the fact that we have a pretty, bifurcated Federal Reserve, that those two numbers will be watched closely. But our core view is that the Fed remains on hold for the rest of the year.
Nadia Lovell of UBS 7900. What's the bull case? What's the bull case for you?
82.
Okay, feels like we're leaning towards that. All right, Nadia, thank you. Appreciate it. Let's get you an update on news worldwide with your Bloomberg brief. Bonnie Quinn has more. Hey, Bonnie.
Hey, John, thank you. Iran looking to block US and Israeli ships from the Strait of Hormuz as part of its proposed deal with Oman. Tehran also moving to require compensation from hostile countries before they're allowed to sail through the crucial waterway. President Donald Trump reiterating his preference for lower interest rates, acknowledging it's not all on Fed Chair Kevin Warsh.
It's up to him a little bit, but not completely. He's got a board that's very political. The United States should pay the lowest interest rate in the entire world. I think he's great. I won't be criticizing him.
President Trump has reportedly spoken to Warsh multiple times since he took over as Fed chair. Under Armour forecasting a sharper than expected revenue decline due to softening demand in several regions. The athletic retailer now expecting sales to fall by mid-single-digit percentages this year. The company's CEO citing a, quote, challenging consumer environment. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. More from Vonnie in about 30 minutes' time. Up next, the morning calls, plus Greg Peters of PGIM, seeing rate hikes on the cards later on this year with a payrolls report about 20 minutes away. We'll catch up with Greg in just a moment from New York City. You're watching Bloomberg TV.
Follow the noise. We follow the money.
Corpay started with one purpose: to help businesses control spending. We began with employee spend, fuel, tolls, lodging, T&E, eliminating misuse. Then to the back office, removing the risk out of paying vendors. And then the world. International payments with the tools to manage currency at scale. For every way your business moves money. Corpay.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
They're just making trade-offs under they have to.
Oil and gas is still important.
Every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Even the mighty might not see it coming. It's prediabetes, and it captures 1 in 3 adults. But you can escape. Take a 1-minute prediabetes risk test to know where you stand and prevent or delay type 2 diabetes. Be your own hero on smartphones everywhere at doihaveprediabetes.org.
We're entering the alpha market, right? This is a market where, I think ambiguity is greater than people are used to. I think it's an environment where there's no free lunch. You have to pick stocks. This is no longer the kind of 15 years of QE and forward guidance that everyone gets trophies.
We never liked the participation trophies, did we? That was Chris Ferrone of Bench Strategics.
No, I'm
back to winning, Bramo.
I'm anti-participation trophy. I felt that way with kids too. If you win, you win. If you lose, you lose.
Yes.
Yeah, no, they didn't quit sport again. Yeah.
Right? Oh, they quit sport after.
Win some, lose
Bring
some.
back the participation trophy. Equity futures look like this on the S&P. We're positive by 0.25%, up by 0.6 on the Nasdaq 100. In the bond market, 2s, 10s, and 30s heading into payrolls later on this morning. That's 14 minutes away with yields around 420, 10s around 466. Given where we are now, even with the moves yesterday, it was still down on the week across the curve, 2s, 10s, and 30s, just taking back some of that sell-off we saw at the back end of last week.
Yeah, and it just again goes to the point of how complicated this moment is. On one hand, you've got issuance. On one hand, another hand, you've got the question about the Fed and all that. And then on the other hand, you've got oil prices and where they exactly are going. And that also is one huge input into inflation and, frankly, the bond yield perspective.
A deal or no deal, the Straits open, kinda?
Yeah, it's great.
That's the last 24 hours, sorta, kinda?
Sort of open.
But not open to US shipping?
Not according to the Iranians.
Right,
And
makes-
if you're any
what kind of deal is that?
And if you're any ship that wants to get through, you have to pay not a toll, a service fee.
It's like being sort of pregnant.
No, that can't happen.
Well,
You have concepts of a plan.
Yeah,
Okay,
concepts of a service fee.
As a conversation, I'm not weighing in on. Okay, Fred Crude this morning, 82. WTI is 70.
It means it can't happen.
Okay. just going to avoid. All right, let's get you some morning calls. First up, Goldman raising its price target on Cloudflare, seeing opportunities from a new internet business model. Your second call from Citi, downgrading JetBlue to sell, citing a, quote, deteriorating risk-reward for the shares compared to the major airlines. That share's having some problem. That company, Grandma, you've talked about JetBlue a few times.
Well, this is the K-shaped economy, and a real question here about the lower-income consumer, or just even trying to cater to people who are looking for a deal. And that's ultimately, you're getting crowded out. When you go to buy a ticket, you see like the basic. Yeah. You don't have any leg room. You can't put whatever, but you're still flying the Delta or the Uniteds of the world, and that's competing with the low-cost.
I used to be a Mosaic JetBlue customer, right? Used to be. Frequent flyer allocations.
Mint's very good.
Mint's a great product.
Yeah, very good.
I speak highly of that product. And after the pandemic, I lost my status, right? And I remember Robin Hayes, this is another status.
Oh yeah, I was gonna say, here we go.
Guy Johnson spoke to Robin. He used to run the company, and Guy said, John's about to lose his status, like he was Mosaic, loves flying with you, blah, blah, blah. And he said he should fly more. That was the response, and I never flew JetBlue again after that.
Yeah,
I took my stand. I just never flew JetBlue again after that.
This sounds like a theme.
I'm running out of airlines.
You're running out. Where do you have status?
We're back to Delta.
Oh, you're status at Delta. Okay, give me status.
Sort of similar stories going to play out.
100%. You feel like
United love it. All right. So to the final call. Deutsche Bank raising its price target on CoreWeave, saying it's very bullish on company fundamentals. The stock is up by 3% in the pre-market. Payrolls just around the corner. Let's get to that with Greg Peters of PGIM. He writes the following: the labour market is somewhere between stabilisation and acceleration. Our base case scenario is one where continued growth momentum supports nominal growth and the Fed hikes rates this year. Greg joins us now for more. Greg, welcome, buddy. It's good to see you. What are you expecting to see in about 10 minutes' time?
Well, I'm not really sure. That's the whole, that's the whole issue on the table here. I think there's an inordinate amount of potential volatility just given where this one payroll prints, and we know that this is a highly revised data series. So we're hanging on this fraud number that's highly revised, and so that's the world that we live in. And I would say we better get used to it.
Greg, how material do you think it would be or wouldn't be to the Fed decision that's coming up in September? Ultimately, for many people in the market, that's how they used to look at this data and have looked at this data for such a long time. Is it different this time? Has that changed already?
Well, I think it's always dangerous to hang your hat on one single data point, but I think this single data point is quite critical here. If, for example, if you see something kind of below 50, I think that does change the mindset in the marketplace, at least around the Fed's willingness to, raise rates. Conversely, if you see something above 100, I think that is added fuel. So it is it's important. And normally I don't get all that excited over a single data print on a payrolls Friday, but I think this one carries more weight than it ordinarily does.
Greg, what's your reaction to last week's Fed meeting? I mean, do you think that Fed Chair Kevin Warsh is being unfairly criticized, or do you think that actually the uncertainty being baked into bond markets has been negative or potentially punitive for growth, or potentially even just generally the Fed's objective?
Yeah, well, they say timing is everything, right? So it's very difficult to pull guidance away from the marketplace in a highly uncertain time. So if we're in a much more placid environment, then I think it would go more smoothly. But, we are in the midst of, a war in Iran. We're, seeing above target inflation for the past 5 years, as you mentioned. There is a lot of uncertainty around the labor market, and so the market participants are looking for a little guidance, a little roadmap into what the Fed is thinking, and so we're just kind of left to our own devices. So I applaud in many respects what the chair is trying to do, but at the same time, it's really hard to do that at this particular time in the marketplace.
How much control does the Fed have over the long end of the yield curve? And I'm not saying that they're losing control as much as someone else is taking control, which is the central bank of Amazon, the central bank of Alphabet, and the central bank of Microsoft, which have been issuing tons of debt at the long end of the yield curve, overwhelming the market and frankly affecting the dynamics that much more potentially than inflation expectations or some of these other metrics. I mean, how do you view the Fed's actions versus the broader market backdrop?
Yeah, I think that is the story in the marketplace. Honestly, there is this deluge of back-end duration hitting the market, and I think it's important to remember that we're just starting, right? So we're in, let's just call it the second inning. This hyperscaler debt issuance story has really just begun. So that is a crowding out effect. That's additional pressure on the back end. And so, central banks have very little control over the back end other than this idea or this notion of credibility. So that's where the back end, is responding. You're having a twofold hit where there's a question, and maybe not quite credibility, but uncertainty, thus risk premium. And then on the other, you have this hyperscaler issuance that's putting a lot of duration dollars into the marketplace. So once again, I go back to this narrative that timing is everything, and the timing is really quite poor in order to enact this new, less forward guidance world.
Greg, do you think that the Fed needs to hike in order to establish that credibility?
If the data doesn't roll over, so you would have to see payrolls be quite weak today. You'd have to see inflation come in really quite moderate next week in order to kind of see that happen. Other than that, I actually think the great irony here, or the cruel irony, is that getting rid of forward guidance is a way of not painting yourself in the corner, but by doing so, Warsh is actually backed into a corner, right? So I actually think he has to, and the committee has to hike in order to kind of gain that credibility back. And you just can't keep talking about how important it is and not do anything about it. You basically have one shot to do that, and that was the first presser. The second meeting and the second presser. That's why the market reacted as such.
Greg, what would you point to specifically as evidence that this Fed has lost credibility that they need to regain as soon as September?
Yeah, well, you're not seeing it in the normal channels, right? So you're not seeing it in bond market volatility. Those measures are really quite muted. You're not seeing it in break-evens, forward break-evens, so 5-year. So you're not really seeing it. It's more of the nominal yields, right? So you've seen a real move in nominals. You could say that a lot of that has to do with the strong underlying growth, but I also think that is kind of capturing some of that risk premium. So there's not clear evidence that there's credibility loss, so let me be clear about that, but there is concern about what the direction is and the uncertainty, and it hasn't permeated and been measured across these normal metrics, but it's happening in the marketplace. So it's one of those things, Jonathan, that it's really difficult to point your finger at one particular item.
Final question. I've only got 15 seconds. My favorite question of the week, and it's Ramos. Do you want some 30-year alphabet debt or the 30-year treasury? Greg, if you had to choose, what would you choose?
30-year treasury.
Greg Peters and Peachy. It's a different answer to the one we got yesterday.
It's a different answer to Priya Misra earlier on JP Morgan. This is really interesting. The idea of, would you rather just take the straight duration, or would you like the credit cushion? Depends on who you are.
Tune in for why next month when we have time and Greg is back on the program on Payrolls Friday, and we'll see how they've traded, right? How the 30-year alphabet piece has traded in the market, and how 30-year treasuries have traded.
All right,
okay?
game
it's
on.
a setup.
That's right.
All right. Cool.
Next week on Real Yield.
You going to host that?
No,
Scarlett might have something to say about it.
No, absolutely not. I'm sure that that will be addressed.
The Payrolls report is just around the corner. Stephanie Roth of Wolf Research joins us next.
One second, Grandma. This guy's gonna buy my car. Okay.
You need Carvana. Entering plate number, no accidents, right? No. Generating offer. Carvana can pick it up tomorrow.
That's an amazing offer.
Sell your car the easy way with Carvana.
Companies everywhere bought into AI, yet most still aren't seeing the return. Billions invested, nothing's working together, making it hard for people to get work done.
That was not me.
Correct, Nick. Only the ServiceNow AI platform breaks down the walls.
Who are you talking to?
The camera, Nick. Connecting any workflow, any AI, and the data source so everything and everyone finally works together. In every corner of your company. We can resolve cases across departments and deliver for customers.
We can run HR workflows and improve employee experiences. And with the AI Control Tower, we can finally see and manage all of our AI.
ServiceNow is the one platform that lets you connect and control everything
seat. Nick, on a chair.
Easiest if everybody just moves down one? Nope, okay.
Hi, I'm Tiffany, and this is my TimberTech story. The combination between TimberTech and Jake really made the process of designing our deck pretty amazing.
English walnut with the TimberTech black frame and the Impression Rail Express blended so well in the forest surroundings.
It was fire resistant as well as aesthetic. The ease and the beauty of the product is exactly what we wanted for the cabin. Did it right. TimberTech, it's everything wood should be.
Hi. Could you please submit your expenses today? You have those expense reports? Hi. Can you submit those receipts?
Sell market IQ. Then I'm going to go to ES. I'm going to go to 89. Buy market ES. I'm going to go to
Never chase a receipt again. Graham.
buy market.
We're all navigating something, but you don't need another take. Sometimes all you need is a different view. Stop overthinking and start moving. Travel won't fix everything, but it gives you perspective. See it differently. Get away.
NAD levels decline as you age. People who take quality NAD have an increase of NAD in 4 weeks, and that increase is 67%. You noticeably feel an increase in energy. You can get quality online or at select retailers.
The system is outdated and archaic and vulnerable to title fraud. A growing scam the FBI now calls house stealing. Scammers can now easily download and forge one document, apply one fake notarization, and then file it with the recorder. Just like that, the property has been taken out of your name. Then they borrow against your home using your equity.
Find out if you're already a victim. Go to HomeTitleLock.com now.
Oh. Payroll's just around the corner. The report, the number, 20 seconds away. The scores look like this. Equity futures on the S&P 500 positive by a third of 1%, higher by 0.66 on the Nasdaq. The main event has been in the bond market for the last few weeks. 2s, 10s, and 30s yields still elevated down a single basis point on 10s, 467 on 2s, 423 yields lower by 2. Let's get to this data. Mike McKee has more. Good morning, Mike.
Good morning, John. Well, it is a disappointment, a kind of a surprise here that may cause confusion into what's going on with the Fed. Negative 23,000 jobs. There have been people who have been forecasting that might happen sometime soon. Ian Lingen over at BMO turns out to be right today. The unemployment rate, though, drops to 4.1%, and I imagine what we're seeing there is another decline in the labor force. We'll take a look at that in just a second.
Order filled.
Private payrolls, 30,000, and also the 2-month net revision, 103,000 taken away. So what we're looking at is a labor market that is much weaker, at least on the hiring side. The change in private payrolls, as I mentioned, 30,000. Change in manufacturing, 5,000. Average hourly earnings up only a 0.1%, so no inflation pressure there.
Order filled.
Year rate, 3.2%. Hours worked at 34.3. That's the same as it was in June. And the underemployment rate, 7.9%. The labor force participation rate does tick down to 61.4% from 61.5. So I'll take a look at the underlying numbers and get back to you in just a second.
Mike, thank you, buddy. You can guess what's happening in financial markets. Let's just start with the headline. There's a lot to figure out here, but for the headline, negative 23,000. The low estimate in our survey was 40. Positive. The median was 80. That's a big downside surprise. So in the bond market, let's start there. 2s, 10s, and 30s. If you look across the yield curve, you'll notice yields dropping quite aggressively at the front end of the curve as people reduce at least near-term expectations for Fed action, with 2s back down to, let's call it 416. In response to that, equities pick up on the S&P, on the Nasdaq, the Russell, with some outperformance around the small caps off the back of this, up by 0.75%. Lisa, just to work through the data and Mike will get to the details. It's a downside surprise on the headline number. You've got that quirk in the participation rate again. So you've got unemployment falling back from 4.2 to 4.1. We were looking Guardian unchanged at 4.2%, and then wages coming in softer than expected. Make sense of this puzzle this morning if you can.
No thanks. I mean, I think that the only way that some people will try to explain this, first, I think that there will be a cohort of people who say it's a random number generator because ultimately it says more about the overarching dynamics of the input of available workers versus the demand on one side. To me, the thing that sticks out is 4.1% unemployment rate. That it ticked down to the lowest level going back to June of 2000.
Order filled.
And it raises this question: is it just people are dropping out of the force? Well, it looks like actually the number of underemployed went down, or at least the percentage. So this, to me, looks kind of like the productivity report yesterday, which speaks to a robust market that is non-inflationary. Again, this goes to this question of: are we seeing what people are hoping for, which is increased productivity?
Order filled.
We're in the process of digesting this data. This is the first move. We always said not necessarily the right move. A bit into the front end of the curve, a bit into bonds across the curve, but you see the bigger move at the front end, just dropping by 7 basis points on twos. Equities responding positively to this as well. Mate, there's an obvious question when you look at data like that, whether it's the headline read, what is happening with unemployment. Am I seeing the consequences of a supply story or a demand story, or both, Mike? What do you see in the data?
Well, I hate to say this, I hate to use this word because everybody hates it, but seasonals. There was a decline of 50,000 jobs in local government education in July. Now, usually those people would tend to fall off the payrolls in May or June. And so I think what we're seeing here is a sort of a distortion in the overall numbers. If you add that 50,000 in, it would be a low 20,000 jobs or so created, but much better than what it looks like now. And when you look at the underlying categories, what you're seeing is slower job growth. So you're taking away probably from the demand side. The construction jobs were up 22,000, which you'd expect given the way construction is going these days. But a little higher in manufacturing and a whole host of jobs, 19,000 in the retail business. And then in terms of leisure and hospitality, 40,000 jobs lost after 43,000 jobs lost in June. And we don't know exactly, but that may have a lot to do with the timing of the World Cup and people who were hired earlier in April and May. So it's not as bad on the top line as it appears, but it isn't great news either way.
Mike, we'll give you some more time. I'll come back to you in just a moment. We've got Stephanie Roth of Wolf Research with us around the table, coming through the same data. Stephanie, good morning.
Good morning.
A weak report or a report I can ignore?
I think it tells you that the labor market is softer than it appears earlier in the year. And to Mike's point earlier, like there appears to be some seasonal issues in the data, just generally speaking. The trend is probably a labor market that's a lot cooler than people had previously thought.
The bias would be, what does it mean for September for this Federal Reserve? Difficult to look at this morning, Stephanie, and say the labour market's a source of inflation that we should worry about. How would you characterise things?
I think that's exactly right. I think it tells you that if data looks somewhat softer in the next couple months, especially when it comes to the inflation side, they're probably not going to want to hike in September. They're probably going to want to just see how the data progresses. Now, that's going to probably have to mean core PCE tracking below 0.25% roughly over the next
Order filled. Order filled.
After September, Lisa, we've got one more jobs report after this. We've got 2 more CPI reports, one next week before that September meeting, and there is a big Jackson Hole speech which will be attended and given by the Fed chair. There's a lot of work to do between now and then.
And frankly, the labor market has not been a source of inflation throughout this entire period. So how much does this matter?
Order filled.
Ask you at a certain point, if you haven't seen the labor market as a source of inflation, but inflation's been persistent, is it sort of the breakdown of the Taylor rule? Is this sort of a breakdown in the relevance of this metric?
I think it's a reminder that there's a lot of supply issues that's driving inflation. It's been a combination of tariffs, you've had the Iran war, and then on top of that, you've had AI adding to inflation. The combination of these things add about 100 basis points to inflation. So if you strip that out, or realistically just move through time as those shocks subside, then you're back to inflation that's a lot closer to 2% without the Fed having to act.
What do you make of the fact that the participation rate in the labor market fell to the lowest level since February of 2021, explaining why maybe we saw the unemployment rate come in, even with a very disappointing overall headline number?
Yeah, I think it might be to some extent noise. We also had to be fair, we also had a similar trend in the print before this. I think to some extent we have to kind of smooth through that, and it's an environment where participation is a little bit than where it's been, but nothing that is so onerous. My guess is in the next print or so you'll see a bit of a bounce back. The household survey is very volatile, so I wouldn't be surprised if we saw a big jump in the next print and we're kind of back to a more normal level of participation.
This morning, UBS's Paul Donovan put out how firms do not simply tell the BLS about their payroll numbers. So do you think because this report feels so out of the ordinary, people are going to start to question once again how credible these BLS numbers are?
I think they're definitely going to ask about the credibility of the numbers. I mean, especially since you just continue to get whipsawed around. I don't think it is a real like broad-based issue when you extract out and you look at the trends. But clearly there are issues when you look at the month-to-month data, and you have to sort of smooth out kind of what's going on. There were some theories that earlier in the year, immigration was boosting the numbers to some extent in terms of the establishment survey. So it's possible that it was artificially inflated earlier in the year because people felt more comfortable in this. Maybe they got their change in their status, and therefore they were able to actually report employment in a legal way, and therefore that's kind of rolling out. Now we're seeing what's left under the surface, which is a labor market that is fine.
If you're just tuning in, welcome to the program. It's fine, but it doesn't look fine when you first had a look at that number. It's negative 23k against an estimate of 80. 80k was the median. The range was pretty wide in our survey, 157 at the high end, 40 at the low. So well below even the lowest estimate in our survey here at Bloomberg. Quirks here, there, and everywhere throughout this labour market report this morning. Unemployment dropping back to 4.1%, which is incredibly low, but it doesn't come with the wage pressure you might expect of a move like that. In unemployment, wages actually declining relative to expectations, softer than expected, still positive 5.1 month over month. We were down from the expected 0.3% and the previous read of 0.3% as well. So that's the labour market data. You push that through this market this morning and you'll see a pretty big move at the front end of the curve, down 8 basis points on Tuesday this morning, back to 416, a move further out along the curve as well, 10's down 6 or 7 basis points to about 460. We've got a CPI read next week, which is still really, really important, and one more payrolls report after this before you get to that meeting in September for this Federal Reserve, and an additional CPI print as well just before on September 11th. Mike McKee's had another read of this. Mike, on the third read, are you in a better place to explain what this is all about this morning?
A little bit. One thing with the unemployment rate is again, it's a function of the labor force, which fell by 264,000 last month, according to the BLS, compared with a negative 720,000 in June. The employment level was negative 87 in the household survey, but that's much better than the negative 507 that we saw in June. And unemployment in the household survey down 178,000, but it's the drop in the labor force that is really affecting the unemployment rate. So it's not so much that more people are getting hired and the labor market is tight. It is just that fewer people are looking for jobs, and I'll leave it to others to try to explain that in the short run. Looking at some of the establishment survey jobs, the one that always gains is healthcare and social services, but this time it was only 22,000. We've been in the 40s, 30s, and 40,000s for months and months, and now we're at 22,000 for that one. And I mentioned the seasonal adjustment factor with local government education being down by 50,000. And then the leisure and hospitality does show signs of maybe part of this being the World Cup effect. Arts, entertainment, and recreation fall by 16,000. Food and drinking service places fell by 26,000. So maybe people hired up for some of the World Cup visitors, and now they don't need them anymore. So there are some things in here that do, as you mentioned, sort of take the edge off it, but it's still not something that's going to push people to raise rates or lower rates one way or the other.
And Mike McKee, well said. Appreciate it. This from Kevin Gordon and Charles Schwab just moments ago. There is no signal to take from this jobs report. This shifts 100% of the focus to CPI next week.
And a lot of people seem to agree. I've gotten other comments. Someone saying this completely conflicts with what they're seeing from their companies as an investor. The labor market seems fine to improving. Some skepticism about the timing, and then someone else said economics, the science of predicting the past. So it seems like a lot of people are looking at this and saying, okay, we're not getting much from this. Let's move on. In other words, when you asked me to interpret it, and I said no thanks, I think maybe everybody else is too.
I'll tell you who's happiest this morning. Do you know who it is? Everyone, it's their evening.
Oh yeah, for sure.
Dollar yen down 157. We've got a 0.8% move on next this morning. Stephanie Roth, Wolf Research, with us for a final read
which is just below the threshold where we think they'll feel more comfortable staying hold. Given the data that we got today, if our forecast is right on PPI, I think there's a much greater likelihood that they end up staying on hold, and just see what all this Powell, this messiness shakes out. To what extent is the labor market actually showing signs of softening? I think what they'll ultimately find is that the labor market is okay, not as robust as it seemed earlier, and it's improved versus last year, but not strong. It's certainly not generating inflation. And the inflation backdrop will probably look a lot better. The seasonals are very much in our favor through the back part of the year, where inflation is just very likely to naturally drift lower.
This kind of stepping up there, more research. We've got a decent understanding of where things are with inflation at the moment. And we've got a decent understanding, I think, after the FT report in the last 24 hours about what it might mean and what it might not mean for the Fed chair Kevin Bush, two hot prints, and they'll be back in September. That's going to be quite hard bar given the expectations of CPI number 10 in the next few CPI prints.
A lot of people seem to think that sequentially, and when we see year-over-year comp, you're going to get lower CPI prints, and that we've already seen the peak in inflation. I think they probably won't get that. This seems to add to that, this labor market report. I find it really interesting how many people are just saying this was too confusing. It doesn't make any sense. Dylan Strata actually has a different take on it, where he comes out and says, actually, this is indicating some weakness, and this speaks to what Andrew Hollenhorst is saying as well. So again, this is the question that the Fed's asking with respect to the framework. What data do you use? How do you consider this? How do you measure inflation? And right now, this morning, this is evidence the market's grappling with the same thing.
I'm waiting for Citi and Andrew to publish any moment now, because this is kind of what he's been waiting for, right? And he's still looking for cuts later this year. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. So recapping the jobs data then, July non-farm payrolls coming in with a downside surprise, dropping by 23,000 versus estimates for growth of 80,000. Employment declining in education and retail, trending up though in healthcare. The unemployment rate ticked lower to 4.1%. The yen jumping against the dollar following that data. The US-Japan historic currency intervention coming to the surprise of key allies too. The Financial Times reporting policymakers in Europe were blindsided by the arrangement, with the US not informing the ECB it sold euros to buy the yen until after the transaction. The hottest buy of the summer apparently is the $10 Dunkin' gift card, thanks to a marketing campaign by Pays. The digital wallet is offering a $10 reimbursement for spending $10 or more at specific retailers. Savvy consumers are taking advantage, with some redeeming hundreds of dollars in credits. And that's your Bloomberg brief. John.
Yes. Vonnie, the important stuff. We appreciate it. Vonnie Quinn, thank you very much. Did you know that?
I spent a disproportionate amount of time trying to scan that story quickly. I still didn't understand how it worked to get free cash. Like, do I buy a Dunkin' or do I get something else?
Still trying to make sense of this jobs report. We'll do that next with BlackRock's Jeff Rosenberg. As yields fall this morning across the curve, particularly at the front end, on a negative payroll print.
Modern enterprise. A lot of moving parts. Comcast Business helps you orchestrate it all with SD-WAN that keeps 150 hospitals working as one. Zero Trust Security that protects data for a bank with more than 5,000 branches. And AI-powered networking that's optimizing traffic across 5 continents. You might need this. It's simple. When you add it all up, no one does business like Comcast Business.
This is Ruth and Sherry. We're about to buy their dream home, but their advisor Chris didn't see it helping long term. So a new investment plan protected their future and helped make their old home feel like new.
We just want to be comfortable and enjoy our life. Chris has been a big part of that.
JP Morgan Wealth Management.
Wherever news and ideas meet, wherever earnings reports and saved orders intersect, the all-new Fidelity Trader Plus is there. Giving you the freedom to trade how you want with your preferred tools, customized charts, and streaming data. So you can start a trade idea on one device and execute it on another. Meet our most powerful, consistent trading platform yet. Meet Fidelity Trader Plus.
Relentless innovation has changed the way we invest.
Innovator ETF.
A name worth knowing.
Still a buy here.
It was the stock market that started history's greatest wave of wealth creation. From factory workers in Detroit to farmers in Omaha, anyone could own a piece of the great American companies. But today, our most innovative companies are staying private longer, which means everyday Americans are missing out. Until now, introducing VCX, the public ticker for private tech.
Guys, tired of nighttime bathroom trips? Prostate Ultimate reduces frequency and urgency, supports stronger flow, and promotes a normal prostate size with the #1 urologist recommended ingredient for prostate health. Search Force Factor Prostate Ultimate on Amazon today.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with the close. Weekdays on Bloomberg. Context changes everything.
The labor market is softer than it appears earlier in the year. There appears to be some seasonal issues in the data, just generally speaking. The trend is probably a labor market that's a lot cooler than people had previously thought. If data looks somewhat softer in the next couple months, especially when it comes to the inflation side, they're probably not going to want to hike in September.
That was Stephanie Roth of Wolf Research tuning in and joining us just moments ago. If you're just joining us now, this is the data, the reality in the American labour market, according to this report. Negative 23K against an estimate of 80,000 in our survey. That's a big downside surprise on payrolls. Unemployment fell back to some quirks in this one, down to 4.1%. The expectation was for that to hold steady at 4.2%, and wages coming in softer than expected at 0.1% month over month against an estimate of 0.3%. And then the emails started to come through. The terminal subscribers started to type away. They all sound the same thing. No signal. Ignore. Focus on something else.
Well, it's just difficult to interpret this because it's sending a lot of conflicting signals. And frankly, there are a lot of bigger questions like what is the employment base and what is the break-even rate of job creation that's necessary for a full employment market. So you can ask all of those bigger picture questions at the same time that you're looking at the headline numbers. That said, there are some people saying actually there is weakness under the hood, or at least it's not as strong as the people thought. You're certainly not seeing the inflationary input. That's never come from the labor market. It's always come from the supply side shock. So again, there are a lot of different crosswinds here, which is the reason why people are saying it's Friday. I want to just
get to the beach. Like they're already, Grandma.
No, right.
I know some of you are. Let's get to the equity market, yes. Positive by 0.5 on the S&P 500. I'm jealous. Up by 1.2 on the Nasdaq. We're buying equities off the back of this. Small caps doing well. Up by 1% in the bond market. Here's your bid. The rally 2s, 10s, 30s. Yields lower and by 8 basis points. We're back to 4.16. Jeff Rosenberg of BlackRock. That's on payrolls Friday. Joins us now from more. Jeff, welcome. Is this something you can ignore? Or is there some information that's worth paying attention to?
Yeah, I think the headline is a bit confusing because you've got the drop in the unemployment rate on a very weak headline and a weak revision. I'd be hesitant to just write this report off because I think that the revisions in the headline number are pointing to weakness, while the drop in the unemployment rate is really about the supply side and the drop in the participation rate. So I think you can have those two things happening at the same time, and that's how you square the message there. And I wouldn't completely ignore it, and the markets are not completely ignoring it because you're seeing a big hike probability come out with the front end rallying here, and I think that makes a lot of sense.
Yeah, it was more than 50% chance that there was going to be a September rate hike, and now I'm looking at less than a 40% chance currently being baked into Fed funds futures. Jeff, what's your understanding of what the tell is here for inflation? How much does it matter to have inflation coming from wages versus the supply side when it comes to whether the Fed will hike and how they view the state of the economy?
Yeah, well, it's both, and we've had a serial set of supply-side shocks since COVID, and that's really been what's been holding up inflation. But the labor market is relevant as well, and so the wages picture here is a little bit positive. I think that's contributing. Let me be more clear here. So you've had a little bit disappointment in terms of the wage figure in the payroll report today. That features into longer-run services inflation, and that's helpful with regards to the expectation on the inflation front. And as you were talking about in the earlier segment, Stephanie, it's really the inflation reports and the inflation picture that's in the driver's seat for the FOMC. But the read-through from the payroll report from the wages is helpful with regards to seeing some easing there. I think that's the kind of takeaway into next week.
How difficult is it to really understand these measures? portfolio companies say that they see robust hiring. We were talking about Neil Richardson seeing 7% wage growth for people who switch jobs. You saw the quits rate come in. You see these other metrics under the hood that point to quite a bit of resilience and even rejuvenation in pockets of the labor market. How do you square that with sort of the weakness that this implies?
Yeah, it's a little bit hard to square those two things. I think, when you highlight job switchers, it's important to kind of distinguish that there's always a premium for the job switcher. The job switcher labor wage inflation rate isn't the broad economy wage inflation rate. So those two things will always be a little bit of a measurement difference. And when you're looking at specific companies, remember that this payroll report is very broad in terms of its capturing across the economy, individual sectors and companies. Those anecdotes can always be somewhat different from what you're seeing in the broad-based data like we're seeing today. So you can have those differences. I think the overall trend in what we had seen had been a little bit stronger, more of a stabilized labor market. The report today kind of points to some slowing. So, 1 point doesn't make a trend, but it is something to pay attention to, particularly, on the revisions. It's a noisy data set, so we don't want to overstate that, but I wouldn't completely toss it out of it.
And Jeff, you're right. And I think that's the point of debate that we've got to have going into the weekend. You were right to point out the market's not ignoring it, but let's think about what the market's doing right now. Twos are rallying because we're taking out the prospect, the potential, or at least reducing the likelihood for an interest rate hike from this Federal Reserve. But at the same time, equities are rallying because there is a belief also there's nothing really concerning in this labour market. That's where there's space for debate, I think, Jeff, this morning. Are we seeing some slowing momentum that might be on the margin? Concern for you, for others, and we should have that debate into the weekend, I think.
Yeah, and I think we'll have that debate. The payroll report always sort of sets the monthly tone in terms of the growth side of the economy. What's happened in the post-COVID environment for markets, and particularly for bond markets, is just the growth side of the picture has taken a second footing to the inflation side, particularly because of the Fed and, you mentioned the FT reporting and potentially what we would expect to see from Fed Chair Kevin Warsh in terms of the inflation piece. So I think that becomes more relevant. And this report, we'll debate it over the weekend, but it'll quickly become yesterday's news. And the more focus will turn to the inflation side, as has been the case really for the last 5 years, as we've been in this above inflationary target environment.
CPI next week, Jeff. Looking forward to it. Thank you, buddy. Jeff Rosenberg there of BlackRock. At the moment, and this is early days, things can change throughout the session, but at the moment, the market sees the best of both worlds. Reducing the likelihood of an interest rate hike in September off the back of this, but not much signal, nothing to really worry about based on the feedback we're getting so far. That's where there's a bit more space for debate.
Yeah, especially when we get the CPI reprints next week, because potentially we will get that upside surprise, although a lot of people are saying that's not likely. I will say, it does seem like things are kind of going the Fed's way to remain on hold, and that's what the market's pricing in.
And the administration, lower unemployment rate, construction 22K, manufacturing 5K. That is a good story to tell.
Should we shut it down?
Shut it down.
Shut it down. Let's
Happy
get to the
Friday.
weekend. There we go.
Friday.
There you go.
How to get it?
I don't like that phrase. Anyway.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in El Ola, Saudi Arabia, and this is Bloomberg.
We're the world's most advanced program built to control driver spend, managing travel expenses, protecting your AP. And our AI virtual assistant
a receipt again. Ram, love finance. You could spend all night checking every receipt and coding every expense.
Oh, it got to go now.
You could let Ram in. Close the books without the busy work. Ram, love finance. We're all navigating something, but you don't need another take. Sometimes all you need is a different view. See it differently. Get away.
NAD levels decline as you age. People who take Qualia NAD have an increase of NAD in 4 weeks, and that increase 67%. You noticeably feel an increase in energy. You can get Qualia online or select retailers.
The FBI calls it house stealing, the latest scam where a cyber thief transfers the title of your home out of your name and steals your hard-earned equity.
It's roughly 60 to 90 days for that person to even figure out that they're the victim of this crime. You start getting foreclosure notices, and you realize you've got 4 mortgages on your house that you didn't even know existed.
Unfortunately, it's on you to protect yourself. You might already be a victim. Check your title status now at HomeTitleLock.com.
Happy Jobs Friday. 30 minutes ago until the start of your cash trade, stocks move higher. I'm Danny Berger.
I'm Michael McKee. Happy Jobs Friday?
Sad Jobs Friday?
Bloomberg Open Interest starts right now.
Coming up is Mike was so rightly putting it, maybe not a happy day. A surprise setback for the labor market. Employers unexpectedly cut jobs in July. Meanwhile, prospects for a lasting agreement to reopen the Strait of Hormuz remain elusive. And earnings season winds down with a mixed picture from corporate America. Let's look at the reaction thus far that we are getting in these markets because of the jobs number. A surprise contraction. Stocks move higher, up about 0.5%. NASDAQ, that outperforms, considering this is a longer duration asset class. 2-year yields come in by 7 basis points. Should this hold, this would be the biggest move down in front-end yields since June 11th, when the president said the war in Iran was coming to an end. And gold, the asset class du jour, up nearly 3%, trading above 4,300. Mike, let's go over these numbers. A surprise contraction for the month.
Surprise contraction. I mean, some people had been waiting for it, given some of the trends in the labor market, but nobody was expecting a negative number. And we did get a negative number, 23,000 down, and we saw 103,000 jobs removed in the revisions over the prior 2 months. That chart isn't wrong there. It's negative 23,000. But the unemployment rate falls to 4.1%. The labor force falls by 264,000, and that's why we saw the drop in the unemployment rate. The average hourly earnings also dropped. They were up only 0.1% during the month, so 3.2% on an annual basis. Now, what moved? Local education. Now, that's a bit of a surprise because those people tend to fall off the payrolls in May and June, not July. So they've made a seasonal correction here that shows 49,000, almost 50,000 jobs lost in local government education. Construction jobs were up 22,000, and almost all of those were in the groups that put together things like the AI data centers, not housing construction. Health and social services is always a big number. It's the strongest hiring category, but it slipped a little bit. 22,600. That's slower than the pace that we have seen. Retail jobs is something to worry about. Maybe 19,000 jobs lost. And leisure and hospitality, a loss of 40,000 jobs. A loss was kind of expected because the World Cup was over, and so maybe that plays a lot into it. But I think what the bottom line of all of this is going to be is all of the economists are going to be going in and doing their MRIs and X-rays on this. This may not be as bad as it looks. It isn't negative. It clearly shows hiring slowing down and fewer people looking for jobs.
Okay, forgive my ignorance here, and this is not to attack the economists of the world, but something like local education, you said it was a quirk, but isn't that a quirk that we could have foreseen, and maybe the estimates could have been more accurate if this had to do with summer schools?
Well, it depends on what the seasonals actually were, and I haven't looked into the background, but usually the seasonals would take away jobs. Technically, they'd add back jobs into June because that's when everybody goes off the payroll. So I'm not sure why it was delayed to July, but it does seem to have had an effect on But the question that the markets are going to try to guess at, even though he doesn't want them to, Kevin Warsh doesn't want them to, is how's the Fed going to react to this?
I think no hire, no fire. If this is kind of what we're seeing now, if that continues, then they can still be patient. But again, we just don't know, and this is the big crux since July FOMC. What is his reaction function? Not that we need forward guidance, but we need clarity on what he's actually thinking about doing. If we get X, Y, Z in the data, or if something comes out of the blue again with oil, or some other shock comes to the system, how is he going to think about it? And we just don't have that, and that's been the biggest gripe and why it was sort of a missed opportunity in July.
I mean, he hasn't talked about the labor market much at all, except maybe we know he doesn't really believe in the Phillips curve. But because he's been so concentrated on inflation, is the right move really to price out rate hikes? If that is what he's concentrated on, and who knows what we get next week for CPI?
Well, it's hard to say that, obviously we're going to have 2 prints, and we'll see what we get next week and how that feeds into core PCE, but it's hard to say the conditions then weren't there in July. If you're that focused and you're that worried about this gap that has persisted. But then he's also muddying the water by saying he wants to look at a broader set of inflation kind of metrics, which is why he has a task force. Now, as we know, the task force doesn't get done the next spring. They're going to have to deliberate among the committee for a couple months. So we're looking at only next summer when we start to actually see the results of the task force probably explained properly from the chair himself. So there's a long period of uncertainty still, as we know, will add volatility. But then again, this is the opposite of that. This is not a volatility-driven market right now. We are one that is, again, risk on.
We'll see you in Jackson Hole, basically.
Oh, I was going to say, it's very simple. He cares about PCE until he doesn't anymore at some defined point in time when the various task forces come back. Mike, thank you so much for joining us. Michael Ball from our macro team. Let's now get to the D.C. reaction. Joining us now is Bloomberg White House correspondent Jeff Mason. Jeff, a lot on the White House's mind, not least of the latest in the Iranian war. But let's start with this jobs picture, because we know that this is a Fed chair who's been communicating with the president. Do we know at all if monetary policy has been discussed or what the reaction might be given this weaker jobs report?
Well, no reaction yet, Danny, but I think we'll be hearing from administration officials in the coming hour with a reaction. And my guess is they'll put a positive spin on this contraction in the labor market. What I would want to say as a sort of fact check, both for the labor aspect but also inflation that we've been talking about, is I do hear some Republicans still trying to blame President Biden for the increase in inflation. And of course, that was a huge weakness coming out of his administration. But this is very definitively President Trump's economy. He's had the tariffs, he's had the war in Iran, and so those impacts, or the impacts from those policy measures, are certainly having an influence on this economy now.
And they're having an influence on inflation, of course, and we get the inflation report next Wednesday. The president, in his latest comments, suggests there isn't much change in where we are with Iran right now.
Right, and that is sort of the state of play right now. We've spent the whole week hearing that there is progress, anticipating that perhaps there's a deal about to be arranged. The latest details that we are reporting is that the Iranian parliament is looking at essentially a draft agreement, and there are some aspects that are being proposed by lawmakers that I suspect would not go over well here at the White House, including charging a fee for what are considered hostile countries by Iran, and also putting some limitations or overall limitation on cargo that would be going to Israel. So that's probably not the type of factors that President Trump is expecting or wanting to hear. That said, he has also been flagging that the U.S. is involved in these negotiations and indicating that a deal could be close.
Jeff, elsewhere in Washington, D.C., we've all been tracking the nomination of Todd Blanche as Attorney General. The latest development this morning, Senator Lisa Murkowski posting on X that she will not be supporting his nomination. Jeff, why the change, and what does this mean for his road ahead?
Well, first of all, it's not necessarily a change. We were waiting to hear from Senator Murkowski about what she was going to do, and she was still a question mark, and that question has now been answered with her saying that she's not going to vote for the acting Attorney General. That is certainly a blow to his chances of becoming the confirmed Attorney General and to this White House's desire to make him the permanent Attorney General. It doesn't mean it's over. It just means it's really, really, really close right now. He can only afford to lose one additional Republican, and the remaining question mark right now in the Senate is Senator Cassidy. And he has expressed similar concerns to what Senator Murkowski
Yes, sir. Good morning. What's going? Um. Like I said, I just wanted to get the opinion from which I don't. Right? I got to go see it. All right. All right. Thanks. All right.
This year. Those are your morning movers. Danny, Nora, thank you very much. We'll catch up with you later in the hour. Coming up, we're going to break down the market moves and jobs data. BlackRock's Rick Reeder will be joining us. This is Open Interest.
Open Interest is brought to you by Interactive Brokers. Trade prediction markets alongside your stocks and options. The best informed investors choose Interactive Brokers.
Some see heroes, others only heroes. We see the era of billionaire athletes, a fad to some, the future of money to others. We see crypto's trillion-dollar swings, the end of jobs, or the end of human struggle. We see the endless funds fueling the AI hype. While others follow the noise, we follow the money.
When 5 fucking days though.
There have always been two kinds of people in the world. Those who worried about their investments. And those who chose some peace of mind. Smart investors.
This is Alex. Alex needed help investing his savings. With his advisor Dennis, he opened 3 accounts. One for now, one for later, and of course, his retirement. More than big goals for his future, Alex has got a plan to get there. JP Morgan Wealth Management.
Meet the all-new Fidelity Trader Plus with your preferred tools, customized charts, and streaming data, so you can start a trade idea on one device and execute it on another. Meet our most powerful trading platform yet, Fidelity Trader Plus.
We make stock gains look like chump change. Use the beginner-friendly option strategies in our new book. Settling for this when our book could show you how to make this. It's not an option. Claim your free copy today at itsnotanoption.com. It's not an option.com.
This is AC Parts.
You could ask a friend.
No.
Or skip the guesswork with Thumbtack.
Sorry, sir.
I think this is this the AC Johnstone.
Hire the right pro today. Your ambition just met its
Sir, how can we help you?
I'm looking for a capacitor.
Powerful, precise.
for personal.
Expect more from your money.
Unfortunately, sir, we don't tell people to the public we're hosting.
Simple setup, unmatched strength and stability. Minimal noise,
All right.
maximum enjoyment. Simple enough for one, better with two. Explore beds and home essentials at Zuma.co.
Now to high interest, a look at what's making headlines around the world. SK Hynix is planning to spend $38 billion on the expansion of its ship-making facilities in South Korea. The move is part of the company's efforts to rapidly double its production capacity and ease a global shortage of memory chips. President Trump reiterates his preference for lower interest rates, but acknowledged that it is not Fed Chair Kevin Warsh's decision alone. In an interview with Punchbowl News, Trump said Warsh has a board that's very political. He also said he won't be criticizing Warsh, calling him great. Bank of America's bull and bear reading climbed to the highest level since 2021. Strategists say that investor bullishness has become so extreme that it's time to start reducing exposure to risky assets. They pointed to broadening equity markets and tighter credit spreads as reason behind investor optimism. Speaking of optimism, let's look at the market rally so far this morning. Again, that is off the back of weaker than expected jobs figures, a surprise decline. So S&P futures up 0.3%. NASDAQ outperforms as yields come in by 5 basis points for your 10-year yield. Joining us now is BlackRock Chief Investment Officer of Global Fixed Income, Rick Reeder. So Rick, the unemployment rate goes down, but a surprise contraction in jobs. Last time we spoke for last month, you said the employment picture is stable, broadly unimpressive. Has your assessment of this labor market changed since then with these numbers in hand?
No, broadly not impressive, I think is the right terminology. In fact, I was thinking about it. I think it's actually remarkable how unremarkable the data is. Listen, I think, when you look at, people say, well, gosh, we're not hiring many people because we have a supply issue. And you saw some of that play through today. But that being said, you're not seeing any wage growth. So meaning there's not that demand for labor that you would expect when you got an economy that's doing as well as it's doing. But we're going to grow. I think you're going to see 6% nominal GDP. You've got corporate top line revenue that's strong. Earnings are strong. But you're seeing operating leverage for companies kick in like you read about. I mean, you look at all these earnings reports, particularly in the tech space. Companies are growing. They're spending immense amounts of CapEx. But you're actually cutting people in many cases. So anyway, I think we're seeing a productivity revolution, and I think we're watching it play out month in and month out. I mean, to have only 20,000 jobs on a 3-month moving average, you strip out healthcare, you have negative job growth in aggregate. So anyway, I think listen, I just think we're going through. I think when they summarize
Hard start.
this, years from now, we're gonna witness something that is productivity. People say it's AI kicking in. I actually think it's just been an ethos around companies growing their business and seeing how you can operate without that much employment.
Well, also, you've got the fall in immigration that is probably contributing to these big declines we're seeing in the labor force. But the people who want jobs are apparently getting jobs with unemployment at 4.1%. So I assume this tells you, as well as the Fed, that we don't have a problem with the labor force side of the mandate.
Yeah, I mean, I think that's right, Mike. I mean, I've been pretty adamant. I don't think the Fed needs to hike, and I don't think you really will solve the inflation dynamic. Part of why I think these task forces will be so powerful is you'll get into what are some complex subjects. When you break down inflation today, you look at the difference between services and goods. You think about what's still sticky in inflation, education, healthcare, insurance. Because you're moving the overnight funds rate up really do much. And you get to the point being if you're restrictive on rate and you're driving mortgage rates higher, I just don't see that as really effective trying to bring inflation down. You've got what I would argue is, maybe it's an okay labor market, but you still need, in particular when you have this much debt on the country, you need to grow faster. You need to put more people to work. And I think that to me is the philosophy that the Fed has to employ today.
Well, on the inflation side of things, Rick, I know you've been a big proponent. Again, the type of inflation we have isn't something that's fixed by hikes, but perhaps by policy, not monetary policy, but fiscal policy. Well, what is the policy you think that could start to eat away at inflation? Is it just like ending a war, basically?
I mean, listen, the war's a big deal. I mean, obviously, not only do you get higher prices in terms of fuel, but there's a transmission effect through that when you talk about, obviously, trade getting slowed somewhat. So anyway, the war's a big deal, obviously. So that will change. Then the dynamic of people focus on tariffs. Goods inflation, when the U.S. economy is not that large of an importer people got really worked up about that last year. So what do you do, and how do you create fiscal velocity? You know, there's a bunch of things you could do, and I think, quite frankly, deregulation is powerful. I think the idea around how do you help with housing, things like zoning, permitting, et cetera. How do you get, like, some of the stuck student loan asset or liabilities on that young people have? How do you transition some of that? How do you help with some of that? I think there's a whole series of fiscal dynamics that can help with inflation, but I don't think moving the overnight funds rate will really do it. And we've seen that before. It doesn't really have that much of an impact.
I guess I would ask you then in that case, because I agree that there's probably not going to be anything happening on the fiscal side because they can't even vote on an attorney general at this point. And the Fed is maybe leading now towards a hold in September. We'll see after the Wednesday CPI report. But that leaves us with an inertial economy. And what do you think happens to the economy if there's no movement on the fiscal or the monetary side?
Mike, I think you're unbelievably good at analyzing this, and I always appreciate questions you ask at the FOMC meeting, et cetera. The only thing I will say is I'm not sure I agree with the inertial concept. I actually think the economy is operating at an amazingly strong level. And you look at the CapEx, it's obviously a big driver of that from AI that's getting into straight growth of the economy in so many different forms. And then you look at consumption today. Consumption, you see this, particularly in areas like leisure and hospitality. You see this in some of the transportation dynamics in terms of travel. Listen, the economy is operating. And actually, the thing that was pretty amazing to me in the last 2 months is some of it had a fiscal tailwind. But the actually had lower and middle income that was actually starting to accelerate. And we see that in we use a lot of this high frequency data. You actually saw consumption in a pretty good place. So listen, I think the economy is operating at an extremely solid level. You would think in the second half of the year, you'd start to moderate a bit post the fiscal tailwind. But boy, you see this. I mean, this was a pretty amazing quarter of earnings reports that not pervasively across every single company or industry. But boy, I thought it was pretty darn good. And part of when you look at the equity market having a pretty good run, particularly recently, you're actually looking at multiples that are coming down because these companies are earning so fast. So anyway, I'm pretty enthusiastic about what the economy is today.
And I'm assuming that enthusiasm over equities translates into your world of credit, Rick. You have Bank, of course, a fund that has been outperforming the broader benchmark by a healthy clip for the past couple of years. I know last time you joined, you expressed skepticism on U.S. IG credit. You like carrying higher income. I think all of this is so interesting to us at a time, Rick, where, as you point out, so much is happening because of AI, especially in debt with the huge issuance we're seeing from the hyperscalers. We've got another $25 billion that this market easily took up from Google just this week. And at the same time, we're going to get more issuance from the Treasury next week. What are you thinking about where you want to place Bank, just given the sheer amount of issuance that continues to hit this market?
Danny, I'll say one thing about, because you've had a backup in rates, you're able to hit your yield targets. I mean, talking about we're hitting almost 7, high 60s in terms of yield. And so a couple of things we've been doing is you actually don't need to go down in credit quality. You actually don't need to go that far down in terms of the liquidity in the portfolio. So, we've been keeping it, we've been adding a bit in terms of European fixed income. I think emerging markets are interesting, particularly if you assume the dollar is not going to be moving aggressively. You made the point right. I think investment grade credit, given the amount of supply we're going to see, data center, hyperscaler, investment grade credit's not that interesting at all. But in the securitization market, they want securitized assets, both in commercial real estate, ABS, resi. Those markets are in pretty good shape. So, we're in an environment where we don't feel like we've got to stretch a lot. These real rates that today give us an amazing ability to keep our yield up without really stretching. We're running right now at an average rating of A-. You're hitting high 6s. We're pretty good. So I think we're trying to be in bonds. We're trying to be as boring as you can be, and take the risk in equities, which have a hell of a volatility to it, particularly single name.
A little bit less risk maybe in the bond market, but there's such an appetite, I guess I would say, for debt for the hyperscalers, etc. How's that affecting how you can sell all of these bonds? I was really surprised yesterday with the Google Alphabet offering that it was so oversubscribed.
You know, Mike, we're living through something, and so one of the real benefits to all the financing that has to come, data center, hyperscaler, U.S. Treasury, UK, Japan, is we're actually going through a pretty historic demographic that is supporting this demand for yield. Insurance companies, life insurance, pension. So it's amazing if you price assets right on the debt side, you can place an awful lot of debt. Now, that being said, I mean, the hyperscalers have clearly widened quite a bit. And so you're getting the levels. I say these real rates, if you're pension today, think, gosh, I can defease a good portion of my liability stream at these real rates. It brings a lot of people in, particularly if you get some spread on it, and you're watching that play out. Like I would say one thing, I mean, the supply's not going to stop coming. And, next week we get a lot of Treasury supply. So, in terms of interest rate exposure, we feel like we don't have to have a rush to add much interest rate exposure and just like clip coupon.
All right, Rick, you're going to stick with us. We have to see how this market opens up, and would love to get your commentary on the continued market reaction to this jobs report. And just to check on where we are with less than 5 minutes until the opening bell, we continue to see a rally as yields come in now by 5 basis points. The front end of the curve, as you would expect, outperforms even more. That's down by about 7 basis points this morning. Brent crude continues to fall as we await the latest on the Iran war. On the other side of this break, we'll have your opening bell and more with Rick Reader.
Your strategy, but performance could be limited by your instrument. Precision trading starts with the right instrument. Over the past 3 years, Interactive Brokers clients outperformed the S&P 500 on average. Like returns, trading costs compound. Interactive Brokers is built to lower costs through smarter execution. Access stocks, options, prediction markets, and more across 170 plus global markets. The best informed investors choose Interactive Brokers.
Blackouts, empty shelves, rising prices. The world is unpredictable. That's why my family is prepared with the 3-month survival food kit from 4 Patriots. And right now, you'll get 2 bonus months absolutely free. 30 shelf-stable meals that last up to 25 years. Hand-packed right in the USA. When disaster hits, I want control, not chaos. Take action today. Get your 3-month survival food kit plus 2 months free at 4patriots.com before this deal is gone.
Introducing Velo Espresso Series 1, a new kind of espresso ritual. This is espresso evolved. There's a power within each of us. When awakened, it can boost performance, enhance learning, even help you work smarter. And you can unlock it with one simple thing: better sleep. Safa provides that with our luxury mattresses, handcrafted with premium materials in our American factories. We even deliver to any room in your home for free. Safa, you deserve the comfort of a great night's sleep.
Watch this. I'm going to spray a regular household cleaning product in the air. Sans uses precision laser sensors to detect anything harmful in your air. That color's going to change and the number's going to skyrocket from those cleaning products. Sans can trap pollutants, allergens, dust, pet dander, gases, chemicals, odor, smoke, and much, much more. And just like that, the color is returned to blue, the number is fallen, and we know we've got healthy, clean air at home.
Some men just have it. It's not the car, the places he goes, or the moments he creates for her. It's the way he carries himself, the way he shows up, and doesn't need to say a word. She can sense it. It's not second guessing. It's knowing. I've arrived. Collars & Co. Presence starts here. Get 20% off today using code TV at collarsandco.com.
2 bells to go until your weekend. This is Bloomberg Open Interest. I'm Danny Berger alongside Michael McKee,
Order filled.
Come on, go. Come on, go.
Order filled.
They also missed earnings. They do have their November release of Grand Theft Auto 6 coming out, which is expected to be the biggest video game debut of all time. So markets overall are rallying, as are this bond market led by the front end as we get rate hikes priced out. We are back with BlackRock Chief Investment Officer of Global Fixed Income, Rick Reeder. Rick, okay, so this basically takes, in your view, a hike off the table. I wonder about cuts though, because when we had spoken about a month ago, you said perhaps we still could get cuts in the back half of this year. Do you think that's still a possibility?
So, listen, you still have a Fed committee that is generally hawkish. You still have a committee that is more focused on inflation than the labor readings. So, listen, I think it could still happen. You'd have to see some
Order filled.
in economic conditions. You'd have to see, we think core PCE is going to come into the high twos.
Order filled.
Down to the high twos. Next year, we think we're going to get into the mid twos. Can you still get it done this year? I think so. But listen, I think you have to. One thing I've learned about investing is not what you think they should do. It's what they're going to do. And today, the structure of that committee clearly is we're going to fight inflation and use the rate tool to be that tool you get there. So, listen, I think they still could. I just think hiking doesn't make a lot of sense today.
Pre-interpret Wednesday for me, though. The CPI, we saw a big drop in market expectations, sort of a knee-jerk move after the labor report. What's it going to take to move one way or another in the fixed income markets on Wednesday with CPI?
Yeah, that's a great question, Mike. So, you've gotten a couple of softer prints on inflation recently. We think we're in this mode of getting 0.2s type of numbers when you look at core. And then, even, I was looking at the numbers for core PCE, maybe a little under the 0.2 monthly reading. So, listen, if you got something significantly aberrational to that, that would certainly move markets. Listen, if the number came in significantly higher, which would be incongruous with what you've seen over the last couple of months, listen, is the Fed going to be on the hook for that? Yes, I think so. You know this better than anybody. I think this, what the chairman has stated, what Chairman Warsh has stated, is not just one number that he's laser focused on. He's looking at the panoply of readings, and our sense is inflation is slowly moderating. But it'll be interesting to see that report, like you said, that comes out Wednesday.
Rick, I do wonder. Obviously, yields are coming in now, but we have had a 30-year yield that has been stubbornly moving higher above 5.2 at one point. Now it's obviously below 5.20. Do you think that this market is at all reflecting its concerns about credibility over the Fed and Chair Warsh?
I'm a little surprised at the concern around, whether it was the last FOMC meeting or, some of what I thought was a little bit harsh on credibility. I think reduced forward guidance is not terribly intimidating to market participants. So I don't really think, can we get more from the Fed in terms of the metrics they're looking at, in terms of the structure of what is going to be important to them going forward? I think so, and I think we'll get more details around that. Listen, I think we're getting a lot of supply of product. You're pushing real rates up because you're getting a financial transmission that is historic in terms of whether it's fiscal supply that's coming from not just the U.S., but obviously, pressures in whether it's UK, Japan, plus the amazing amount of supply we're getting in the credit markets. So I think it's more that than it is anything else. And like y'all have said, we still have some stickier inflation that is keeping these rates up. So anyway, those are where I would put what's the influences.
Hey, Rick, just super quickly, because we're about to talk to our tech reporter, Ed Lolo, about all the AI debt coming in, and we talked about it just a moment ago. You talked about what it does to the IG market. Do you think it changes the attractiveness or the pressure on the Treasury market at all, getting all that supply from the AI hyperscalers?
Whenever you push that much supply into the market, you think about there's a crowding out effect. Listen, the U.S. Treasury is still the behemoth in terms of issuance, but you take what's coming in IG, asset backs on the backside of it through data center. So yeah, I just think we're getting a lot of supply, and all markets, including government bonds, are reflective of that.
Hey, Rick, we always appreciate your time, especially on a Jobs Friday. BlackRock's Rick Reeder. And at the top of the hour, discuss the economy with White House Director of the National Economic Council, Kevin Hassett. Please send us your questions if you have any. Let's now bring in Bloomberg Tech host Ed Ludlow. Ed, this has been a question. We're just speaking with Rick there about AI issuance that's vexing the entirety of the market. But can you walk us through exactly what we've had from Alphabet? Because it seems like the supply, yes, it's large, but the demand, it is surely there.
Yeah, I mean, the latest from Alphabet is $25 billion in US denominated. I think that what's interesting is you now have to stack Alphabet, Amazon, not just in their dollar-denominated issuance, but they've looked at the European markets and other non-dollar markets as well, right? And the message from the tech issuers is we won't overwhelm you with supply. But what Rick was talking about is that supply has exploded. $200 billion in dollar bonds this year versus just, I think it was north of 10 billion from high-grade tech companies a year ago. So like clearly something's changed. And the main point that maybe I think Rick referenced was that like there's been poor trading after issuance where essentially there's lots of $25 billion bond deals like Amazon, Nvidia, SpaceX are case studies outside of Alphabet that quite quickly fell below issue price. And that's just facts, that's data. How the market feels about it longer term, you just have to wait and let's talk about it in a year from now.
Well, you said the companies have said we're not going to overwhelm you, but they keep coming back to market and they keep finding that they need more money. Is it likely to continue?
Why is it still there?
They need more money. I mean, like the other thing that has not changed is there's a rationale for needing to raise, not just through debt markets, right? Alphabet's interesting because it also has very big activity in the equity market, and they continue to sort of maintain the idea that demand for compute is running way ahead of their current ability to supply, and that capital greases the wheels of building real-world infrastructure, but because they have visibility on that demand on a multi-year horizon, they're willing to raise the money now to expedite that build-out. I mean this with the greatest respect from economy. This is not like the dot-com bubble or the financial crisis. These tech companies are completely different beasts to what you were covering in those eras, right? They have balance sheets that you just wouldn't have even heard of at that time. So everyone's pretty sanguine about it.
Yeah, but sometimes there are echoes, rhyming pieces of history, even if it's not exactly the same. And Ed, part of the conversation then had been, all of this issuance just showing something as a top. And I think SpaceX maybe is interesting and constructive in all of this because there were a lot of fears that with the lockup expiring yesterday, 911 million shares eligible to come into the market, that it would mean a huge problem for SpaceX. But Ed, that's not what we saw. This is a company that rallied 6% yesterday and is up another 3% this morning.
Okay, so thank you for showing the 5-day chart. This is SpaceX this week, up 10.5%. It's its biggest weekly gain since the week that ended Friday, June 19th, the first full week of trading post-IPO. Obviously, there have not been many up weeks in the interim, right? If we're saying that's the size and scope, right? It's the longest weekly gaining streak since the week of July 3rd, which, it hasn't been going up. There have been many other catalysts, like earnings was a catalyst. Prior to earning, the stock behaved unusually. There was a lot of short covering going into the lockup expiration. And if you there's a chart in the Bloomberg story of what happens with the lockup through to June of next year when Elon Musk's Class A shares come in. There's a lot more to come. People are still trying to understand the business model as much as anything beyond the mechanics. And one thing I found really interesting as a final data point is 911 million shares hit the market. I think 250 million shares changed hands. So, I think it's just taking time for people to say, for what reason are you buying this stock? And is this a rocket company, or do we believe the AI story that was the mainstay of this week's earnings report?
I have to say, when I asked my question to you a mere minute ago, it was like SpaceX is up 3%. As we've been talking, it was edging up near 5%. So a lot of volatility in this thing. Ed, thank you so much for joining us. Looking forward to Bloomberg Tech. That's Bloomberg Tech host Ed Ludlow. Catch him in about an hour and 20 minutes time. Let's get a check on your markets. About 20 minutes, or 10 minutes rather, into your trading day with an overall market that is up 0.3%, despite the fact that there are more stocks that are trading down than are trading up. So breadth isn't fantastic, but Nvidia, Amazon, Broadcom, Microsoft, these giants are trading more heavily to the upside, which is helping us outperform. Palantir, with their strong earnings this week, continues. Airbnb, they posted strong results, lots of demand in the US and Europe, so Airbnb shares up 14%. On the downside,
If you earn over $2 million a year and your entire tax strategy is one meeting with your CPA a year, you're leaving a fortune on the table. Your accountant is not failing you. They're doing a different job than the one you actually need, because reporting and strategy are different disciplines.
Neil Jasani Tax Advisors, a national tax and accounting firm for ultra-high income households and mid-sized businesses.
This is the true story of Luke and Ann, who spent a lifetime saving for retirement. But living off those savings...
Scary.
Scary. Okay, deep breath. Here comes their advisor, Matt.
Our job is to manage the money. Your job is to enjoy it.
And with a plan, Earn and Save became Invest and Spend. Family trips, world restaurant tours, and Luke's new tractor.
Oh, riding lawnmower.
Right. Sorry. What matters is that with Matt's help,
We're getting a lot more enjoyment out of life.
JP Morgan Wealth Management.
The future of entertainment isn't happening behind closed doors. It's happening where Hollywood meets Silicon Valley, where executives come to break news, where creators, investors, and innovators
Here you go.
are leaders shaping the future of what we watch and consume.
You're good at your job, bro. Like, this is actually the first time anybody's ever asked me that.
Join Bloomberg's Lucas Shaw and the leaders redefining the future of media and entertainment. Bloomberg Screen Time, September 30th through October 1st.
16, when my father passed away, my dad had one life insurance policy. That's why I was able to go to college. To protect your family with life insurance from Aethir, you can get same-day coverage without ever leaving your home.
Into the knees.
At ethos.com.
When was the last time you made a return like this? Options often offer higher returns than stocks. Cost less, can reduce risk. Learn how in our new book. Get your free copy at itsnotanoption.com. Itsnotanoption.com.
Order filled.
There's an easier way. With Thumbtack. Download the app today and care for your home from top to bottom.
Come on.
Robinhood, trade and invest, all in one place. Take advantage of it.
Order filled.
Portfolio, trade crypto and equities. Plus, experience intuitive options trading. Your ambition, just man's match.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee from the Mexican border, and this is Bloomberg.
This is Open Interest, and you're looking at the principal room. Coming up, an exclusive interview with Ethan Allen, CEO for Retail Wari. That's at 10:40 a.m. New York time, after them being targeted by an activist investor. Let's hear from the South Side this morning and get you your top calls. With that is Norma Linda. Hey, Nora.
Hey, Danny. First up, SpaceX. You know we can't get enough of it. Argus upgrading the stock to buy, saying it's encouraged by how quickly the company's AI investments are paying off, and it likes the growth ahead. Shares of SpaceX up about 4% this morning. Now from space back down to Earth. Gap sliding down 1.2%. That's after a downgrade to equal weight at Wells Fargo. The firm says it's worried about Old Navy, saying the brand has some issues with its product mix and isn't giving shoppers enough value. And Wells says there's no quick fix here, which could mean more pressure on earnings ahead.
Your call has been forwarded to voicemail. The person you're trying to reach is not available. At the tone.
Rushing to defend it either. TD Cowen cut its price target to just $5, pointing out that sales were already coming in soft before the cyclospora outbreak. And TD isn't alone. Citi, Oppenheimer, D.A. Davidson, and
Can you check for me if you have this capacitor with the hard start
Nora,
kit?
thank you very much. Let's get more on the food industry. After those week green earnings, we're joined by Bloomberg consumer reporter Red Brown. I guess, Red, it doesn't really matter whether or not Sweet Green was subject to the outbreak, but the very fact it happened enough has shied people away from ordering salads.
Yeah, I mean, I think we all sort of joke about it right now. Like, is salad safe? Can I eat this, right? Like, it's just anything that, as it happens across the population that has an effect, and then you have to kind of layer on top of that when it comes to Sweet Green. Like, they were already sort of sliding. The sales were soft. people do not want to spend, even for their cheaper options, these wraps that they've rolled out, which we're talking quite positively about, but it's still a $15 lunch, right? So it's just it's really bad timing for Sweetgreen. They were trying to do some things to kind of turn things around, but now we have this sort of just overarching feeling that I don't really want to eat a salad. I'm not sure about a salad. I'm already not sure that I want to spend that much money for something that it just sort of compounds that for Sweetgreen. And we're seeing now the impact of that. They basically doubled the slowdown for their sales expectations for the year. So they see that this is going to be a continuing problem for them as well.
Other loser today, Wendy's, missing it, saying they're scrapping their forward guidance.
Yeah, Wendy's, the new CEO is kind of coming in here and making kind of drastic changes. That's been a company kind of in the slide for a while as well. It's interesting too, just given the context of Burger King giving really strong results, McDonald's making some moves to get back in the positive direction over the past year or so. It's like Wendy's really is this one that's falling behind. It's a shame because with Wendy's, like they do have sort of higher quality. They're seen as sort of a higher quality product, but just hasn't been able to kind of translate into an upwards kind of sales trajectory for them. So it seems like they're shoring up the balance sheet to maybe make some bigger moves in the future, which is kind of seems to be the thing that's resonating with customers. When we think about Starbucks, think about Chipotle, the two kind of top performers in the restaurant space this quarter. They've both made investments into their kind of physical, real estate to get people in the doors. That's what people want to see right now. They want to, they want to go to a nicer restaurant. They want to feel that value when they go.
That's kind of where I wanted to go with this, Red, because we're at the tail end of a lot of the restaurant and food consumer earnings. Is that the takeaway for you, that the companies who invest in physical spaces are outperforming, or is there something to like the menus or the value that they're offering consumers to the ones that outperform?
Can you find me a physical store?
And this is like consumers,
with
companies overall, what we've been paying a lot of attention to, but restaurants are a really good example of this.
Parts?
Listening to your consumers again is really important. I think in the days of the early post-pandemic years, everyone had money and it was just easy to kind of spend, right? It didn't really matter what you were putting on the plate in this instance. People are willing to shop out, right? But now we're getting into this instance or this moment like where you need to really give people, intentionally give them what they want. So Starbucks, Chipotle are listening to their customers. They're trying to keep their prices in check. They're giving them new things that they want to try, new flavors. That's really popular right now. And the companies that don't have the sort of capital to do that, Sweetgreen, Wendy's, both good instances of that, they're the ones that are going to be kind of falling behind in this moment. People are feeling pinched.
Red, thank you. Fantastic work all week this week. That is Bloomberg's Red Brown.
Order filled.
The latest consumer earnings for us. Coming up, leverage ETFs are becoming so-called momentum monsters that are changing how investors trade.
Order filled.
This is Bloomberg Open Interest.
Come on, you know you want to get up out of there. Come on. Come on, come on. Come on.
How did I get here? I spent 20 years drilling on the science, and I'm building a plan to help my family for our road ahead.
Invest in where you are going. Get the growth potential of mid-cap companies in one ETF with MDY from State Street.
You're looking at Carvana's newest and proudest customer. So proud that we're teaming up to create Shackvana. Shackvana will be 100% online so customers can shop from anywhere.
That's so Shackvana.
Visit Shackvana or Carvana and buy your car today.
I know how to make slick-looking goggles/glasses, but I have no idea how to make slick-looking social media stuff.
But GoDaddy Aero uses AI to create social content out of thin air, like this one.
All Gox goggle glasses are great gifts for all guys and gals.
When the sun rises over the sea, and the waves dance in the morning light, let the sun's warmth guide your way. Through the trees, across the field. Every step, each passing day,
Order filled.
is a true piece of art.
What if the future of finance wasn't just around averages, but around you? At Abacus Global Management, we're reshaping financial planning around the most personal data point possible, your lifespan. But it's more than just insight, it's control. As a technology-driven asset manager, we empower investors with an integrated system to take command of what matters most, your time, your future, your financial destiny. This is a new era of investing. Welcome to Abacus. Abacus Global Management.
The leveraged ETFs have really created a momentum bubble, as I said. Sometimes it's good momentum, sometimes it's bad momentum, sometimes it's at the last 30 minutes of the day, and it changes the dynamic of the trading day.
Bernstein's Alex Shaloff discussing how leverage ETFs are changing how investors trade. James Seyfert of Bloomberg Intelligence has been discussing how leverage funds have gone from reflecting stock moves to helping create them. And James joins us now. James, can we get into the structure of this? How is it altered, and that these are having such a driving force in this overall market?
Yeah, I mean, they're still a small piece of the pie, but they're adding on to
HVAC parts
So if you're a levered long product and the
and
market
supply
goes up, when they
near
rebalance
the
at the end of the day,
Bronx.
they have to buy more to get that same sort of exposure. So they are, like you said, contributing to the momentum of the driving of the stock market. And the same happens when it goes down on the long side of the asset of the position. Then you take into account the fact that most of these assets are in long products, and the ratio peaked at about 19 to 1, long to short. So a lot of money isn't on the short side. They would kind of offset that. But again, I come back to the fact that these are still relatively small, at least here in the U.S. There are some areas of single stock ETFs where they are getting large and impacting the underlying market more frequently. But this just comes back to there's leverage in the market. We just saw a hedge fund blow up. Like, this is part of the market, and leverage ETFs are, yes, they're getting bigger, but I don't think they're like completely driving what's happening here.
Well, another issue in the whole market there is this latest Bitcoin hack. How's that affecting the ETFs? Because this came out of a cold storage.
Yeah, so this wasn't Bitcoin itself that got hacked, for everyone listening. But what ended up happening is a wallet provider, somebody that you would store this Bitcoin with, they had a bug in their software firmware that didn't provide enough randomness, cryptography, any sort of cryptocurrency.
Hello, how you doing? I'm looking for a capacitor.
Or secret code might be. In this case, there wasn't enough what they call entropy or randomness to the number that was generated. So we ended up with over $100 million
All right,
now in
thank you.
Bitcoin. And as we predicted, as soon as we wrote a note earlier this week, this was going to cause inflows to the ETFs, because there's a lot of people that believe, if you want to hold Bitcoin, you need to hold it in a cold storage wallet. And this has just shaken the masses, and we've seen it in the flows. We've seen $750 million come into the ETF so far this week, which is one of the strongest weeks we've seen so far in the last quarter or so.
That's really interesting, James, that it has that effect and doesn't make people question the credibility
If you have it, I'll come pick it up.
themselves. Is it just fair to say that there is a base of believers in crypto that they'll just shift the way that they own the asset class versus maybe rethink owning it at all?
Yeah, I think that's part of it. I mean, the fact of the matter is this isn't a hack on the cryptography. It's somebody who is selling a product didn't do a good job at the one thing they really should have been doing is what it comes down to. But part of it also could be people just needed to they had coins on a wallet that could be theoretically compromised, and they didn't trust the system they had set up at the time, and they decided we need to get money into the ETFs as a stopgap right now, and then they'll figure out maybe a hardened cold storage solution for themselves. But for the most part, I think, yes, there's a lot of people that still believe in this asset. If you look at the price, it's gone down a little bit. For the most part, we've been trading sideways for a long time now, and this really didn't impact the price, despite what I would say is this is like just as bad as FTX in some regards to some hardcore Bitcoiners. This has really shocked the foundation of what some of the people believe.
Can you quickly explain to me, though, why people don't take this one step further and say, well, the ETFs have to hold Bitcoin, and with all the hacks going on, that could happen too. So even if I'm not holding the Bitcoin itself, but shares in the ETF, I could be vulnerable.
Yes, I mean, theoretically, you do have a whole bunch of custodians, institutionalized custodians like Coinbase, BitGo, Anchorage Digital, Fidelity, Gemini, even. But they have much more hardened protocols around how this Bitcoin is stored. They use what's known as multi-signature storage, so it's not just one key that needs to be guessed, it's multiple that needs to be guessed. So there's all these hardened ways that institutions, but at the end of the day, yes, there's no risk that your exposure to S&P 500 stocks is going to get hacked out of an ETF. However small that risk is for Bitcoin ETFs, it's still a risk that you have to consider. It's disclosed in all the prospectuses. But the process of generating those random numbers, those private keys, is way more intense and way more secure than what happened with the cold card wallets.
James, appreciate your time this morning. James Seyfert from the ETF Bloomberg Intelligence team, and tune into ETF IQ on Mondays at 12 p.m. New York time. Fed inflation rather.
Yeah, because the original is the original is discontinued. It said it's an MF.
Bloomberg's ETF Friday is brought to you by Invesco QQQ. Let's rethink possibility. Invesco Distributors Incorporated. Think it's all about tech, bro? Rethink innovation in all its forms. Invesco QQQ gives you access to the innovators of the NASDAQ 100 across hospitality, logistics, pharma, energy, travel, and more. All in one ETF.
Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more. A prospectus or summary prospectus at Invesco.com.
Good job, Amy.
The lights go out and people panic, and power becomes invaluable, doesn't it? The Alpha Case Elite from 4patriots.com keeps your power hidden in plain sight. See, it looks like an ordinary briefcase, but inside is a silent, fume-free generator that runs essentials without gas, without noise, or any unwanted attention. It's safe to use indoors, like your garage here. Quiet enough to stay unnoticed and compact enough to take on the go. It comes with a free built-in solar panel to recharge. So go on over to 4patriots.com now and get yours before the next blackout.
This is Espresso Evolved. Discover a new kind of espresso ritual, where each interaction inspires the light. Precision with a presence. To move espresso forward. Introducing the Espresso Series 1.
If you know luxury, it's not just award-winning, it's rewarding. Sattva Mattresses supports all types of sleepers.
Yeah, I'm out.
Luxury is handcrafted and assembled in American factories and brought directly to you with our complimentary in-home delivery and setup service. Which is why over 90% of customers would recommend Sattva to friends and family. Sattva, luxury mattresses.
The average home collects 40 pounds of dust a year. That's where Son's comes in. Designed to target dust before it settles, and the everyday pollutants hiding in your home, like dander, smoke, odors, allergens, and chemical leaks. Son's uses 3-stage HEPA filtration to capture up to 99.9% of harmful particles, so every breath you take feels cleaner, fresher, and healthier. Spend less time cleaning and more time enjoying your home. Try Son's risk-free.
Adam is finally getting a full 12 hours of sleep thanks to Coterie diapers.
We switched to Coterie, and he started sleeping 11 hours a day.
When we made the switch, our baby started sleeping better through the night and we made less diaper changes. So if you're needing more sleep and you want to upgrade your diaper, try Coterie.
I did 100.
30 minutes into your trading day, welcome to Bloomberg Open Interest. I'm Jamie Burke alongside Michael Wendy. A rally in bonds, a rally in the secondary market just 6 points away from an all-time high. Coming up, a surprise setback for the labor market. Employers unexpectedly cut jobs in July. Meanwhile, prospects for a lasting agreement to reopen the Strait of Hormuz remain elusive. And earnings season winds down with a mixed picture for corporate America. And we begin with the July jobs list. Mike, it's probably worth just revisiting it an hour and a half after that data. Exactly what the data said. So a drop of 23,000, and at the same time we see unemployment come in too.
Unemployment came in, but we saw a big drop in the labor force, 264,000. Last month it was 720,000. So nobody's looking for a job.
Anyway, I
is
got
one
to
reason that
make
the
this
unemployment
drive
rate is going down.
because I know
The
Jazz.
other component of this is that average hourly earnings did not rise significantly, and so at 3.2% last month we're behind the rate of inflation.
Well, at least we know it means that inflation in this economy is not coming from the labor market. So that's certainly one of the takeaways. We'll see what CPI brings us next week when we get that on Wednesday. At the moment, this market, though, pricing out rate hikes from the Fed. Let's continue the conversation. We want to welcome to our global TV and radio audiences. I'm Jamie Burke alongside Michael McKee. Employers unexpectedly cut 23,000 jobs in July, falling down the revision in May and June figures. Let's bring in White House National Economic Council Director and Asset Director Hassan Great this morning. And I
you don't want to just get a compressor. There's a whole, and plus, to schedule an AC guy in a week like this, you ain't getting
labor force participation also fell, which is the reason that occurred. So looking at the figures in the state of the jobs market, are there any areas at all that you are concerned about?
Right. Well, first of all, I've been talking about these numbers with Mike for how many years now? 20 years. And he really does raise some good points. And the thing that I would say is that because of our border policy and because of deportations and the retirement of the baby boomers, that labor force participation is kind of on a downward trajectory, which means that the break-even jobs number, that is, that the jobs number you need so that unemployment rate doesn't go up, has gone from maybe 120, 130,000 a few years ago to maybe about 40,000 now. And so what it means is that what the market is used to looking at, it's like a normal tread the water kind of jobs number if it's around 100, is no longer true. If you get a number like 100, then that's really like a great number and should make the unemployment rate go way down. And so that's like the technical big picture. Digging into the numbers, there are some things that really jump out at me. That it was like private sector job creation was right about at the break-even positive number. It was government employment that went down a lot, about 50-something thousand. And the other thing is that we see in the hospitality sector, the end of the World Cup is really clearly in the data too. If you exclude those two things, you had about 100,000 number, and that's consistent with all the other indicators, like the purchasing managers being really high, unemployment insurance claims being about the lowest they've been since World War II. All these other indicators suggested, the market was right when it expected around 100, and given that there's just a minor correction that gives you about 100, I think suggests that's what the truth will be. But we need to see, future numbers before we can make a final judgment, and that's why it's great to have a person like Mike around to help us think about it.
I agree, Kevin, for what it's worth. I absolutely agree.
Well, predictions are hard, especially about the future, as Yogi Berra said. We're both economists. Let's get walking here. The possible growth, potential growth for the United States or any country is based on the size of the labor force, whether it keeps growing, and productivity. And you're taking credit now for the size of the labor force essentially going down because of the immigration policies of the administration. So is that a good thing for the economy overall?
Yeah, I mean, what's going on right now is if we do the old potential GDP calculations, then you add productivity plus capital deepening plus, labor force participation or labor's contribution. I think that one of the things you see in productivity is that it's probably running north of 2.5%. Capital spending probably adds at least 1% to that. So before you get to the labor story, you're looking at the 3.5% GDP number. And I think the labor story is still going to be positive. I just think that it's not going to be as positive as it typically has. If you go back over 40 years, the labor story adds about like 1.5% every year to GDP. I think now it's likely to be about half of that or a third of that. Essentially, that, by the way, you mentioned the hourly earnings. If you look at the weekly earnings, they're actually up relative to inflation quite a bit, about $1,000 overall for all Americans, about $3,000 for manufacturing workers, $4,000 for construction workers. And so there is something going on too, where people are something in hours that's going on that's offsetting the participation.
The president watching in the Oval Office is just saying, you got your point in, Kevin. Good job about that.
I don't know if he's watching, but I'll find out. I can tell you.
People we've talked to so far today are basically saying this is a non-event, even with the negative number for the Fed, because it shows the labor market is stable, if nothing else, and they can focus on inflation. I'm wondering, though, why the president is saying things like Kevin Hassett can do what he needs to do. The labor market was stable under Jay Powell, and the president was really mad at him all the time. Why is he giving Kevin so much more runway, even though conditions haven't changed all that much?
Right. Well, I can say that the president, there have been some news stories that the president's talking to Kevin Warsh, and of course he is, and he talked to Jay Powell too. But the other thing is that Kevin Warsh and the president had a very close long-term relationship from New York City, from Florida, and they talk about the economy all the time, and I talk to Kevin as well as does Scott Bessent. And so that's like not really news. And the fact is that there's somebody at the Fed now that the president is 100% sure is going to do what
what's right based on the numbers and not play partisan games. And you know, heard me mention some of the partisan games.
Apologies for jumping. I just wanted to pick up on the point of the conversation because you mentioned about the economy. Are they talking about monetary policy as well, or is it just like broad economic advice?
I've not been listening to the conversations, but I'm sure that the president doesn't say, hey, you got to do this or that.
Doesn't give them time to be right. Rule-based systems were built for.
Let's say that this Fed does hike. There was an FT report saying that perhaps the chair, Warsh, might hike if the data continues as it is for September. What do you think the president's conversation would be like with Fed Chair Warsh should that happen?
The president is going to respect the independence of the Fed. I'm highly confident. And when it's very, very natural for the president to do something like say, hey, you know, Chairman Warsh, what do you think about today's job number? That's a very normal thing for him to do. But I think that's the way you should think about the balance of the conversations.
Forgive me for asking this, but I've been dying to ask you this question since you brought this up last Friday. You said that the biggest danger to the economy is that socialist, communist Democrats actually have a big victory in November. What is socialism in your mind?
Well, you know, Mike, that I, as CEA chair, wrote a chapter about it in the economic report of the president. Was widely criticized because people said, oh, there's no way the Democrats are socialists. I didn't say Democrat in the report. I said, here's the risk of socialism. But then I wrote a book, The Drift, Stopping America's Slide to Socialism, because I believe socialism, we are sliding towards socialism through that party. And so socialism is when the government owns the capital and then hands it out to people. Is a very simple definition. And so let's just say, hypothetically, the government decides to have grocery stores where it sets the prices and tells people like when they can get in and get the cheap stuff. The history of this is that the grocery stores end up being empty. Prices don't matter because there's nothing to buy. And over time, socialism leads to, you know, public disorder, and you see it in Venezuela, you see it in Cuba, and so on. And so it's a terrible path to go. But I think that what people underappreciate is that the policies that have been advocated by Democrats since President Trump took office, where hey, you could have wealth taxes, you could have really high taxes on income, you could have really high taxes on capital gains. They've been basically, you know, sliding towards socialism for a long time. And so while the new people are a lot more charismatic than the people in the Senate, I think the policies that they're advocating, Medicare for all, you know, like, come on, Hillary Clinton's healthcare policy was about that, right? And so that I think that that's the uncomfortable thing that Democrats have to come to terms with, is that these socialists are actually advocating things that Democrats have advocated for a long time.
Well, if government ownership of means of production is part of the definition there, then the Trump administration has taken shares in Intel, MD Materials, Trilogy, Metals, Lithium Americas, and they've got the golden share in U.S. Steel. Why is that not socialism?
Yeah, because it's not controlled. So, for example, the Norwegians have a sovereign wealth fund. They own maybe about 3 or 4% of U.S. equities. That's not socialism. They're not going in and telling the management what to do and so on. And so I think that one of the things that President Trump and Howard Lutnick have noticed is that in the end, the U.S. would be way better off if we have something like a sovereign wealth fund. And we're certainly putting up firewalls to make sure that the government can't come in and micromanage those firms.
We just heard from Rick Reeder of BlackRock, you know, well, we need to see something on the fiscal side to try to get the economy moving and companies spending again. Does the president have any plans to propose something like that, or are we kind of stuck until after the midterms, and or if the Democrats take control of one of the houses, we're stuck for 2 years?
You know, I think that Rick's call for, you know, some kind of stimulus package, I guess I haven't seen what he said, feels completely inconsistent with all the data I'm seeing right now. And so I'd have to see what Rick was saying.
It's going. That's what I thought.
Right now,
There you go.
Obviously, we're watching closely the welfare of the American people, but we haven't had meetings where we talk about a stimulus bill.
Order filled.
It's often that great
Oh, come on.
people who can deliver them hard truths. And it's a strange time in this economy. Many things are changing, be it AI or impact of higher oil prices. I wonder what those conversations are like. How often are you coming to the president and delivering him advice that's maybe hard to take, that parts of this economy maybe need various efforts? How often are you having those difficult conversations?
obviously can't talk about specific conversations with the president. I was in the Oval with him last night. We talked about a wide range of issues, and he doesn't really have much patience for yes men. And so when you go into a meeting in the Oval, the one thing I can say is that you cover a wide range of topics and a wide range of opinions.
All right, what do we think is going to happen now with Iran? And the reason I ask that is because everybody also that we have talked to says that, boy, it would sure do a lot if we got that war over with and prices came down for energy.
Well, again, I'm not involved in the negotiations with the Iranians. I don't have any insight. It's not, if it's stronger than yours on the specifics of the negotiations. I could say that we've done an enormously good job stabilizing global energy markets despite this disruption. By doing things like increasing production pipelines, getting the Jones Act waived so that American energy can move to the coast. And that's one reason why, while energy prices are higher than we would like, they didn't go nearly as high as a lot of the people on your shows were saying, right? People were saying we're going to be stuck at 100
Order filled.
oil just a few months ago. And so I think what that means is that all of these steps that we've taken in increasing energy production, especially in the U.S., means that when this is resolved, that prices are going to drop a lot. And I think that that is something that's being priced into futures markets, and it's actually affecting decisions today. Because if you buy oil today somewhere, then it usually takes about 2 months to be shipped, and so it really puts a downward pressure on prices today.
Order filled.
Come on, it has to go. Come on. Come on. Go, go, go. Go, 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 go,
The president's budget would add a lot more to the debt. That means more bonds have to be sold, and we were just talking to a lot of people this morning about how much private debt is coming to the markets, especially from the AI sector.
Go, 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 go.
The country having to pay a lot more because there's a lot of demand for bonds right now. A lot of demand to sell.
Well, I mean, the point is that what the president has put out a budget that gets
Order filled.
GDP down to almost over a 10-year window. We've taken significant steps to achieve those goals by, for example, reducing federal employment by more than 300,000 workers. And I just got a briefing on the vice president's fraud task force yesterday that, wait till you see there's going to be
I don't think I got it. I missed it.
Just in a year, so multiply that by 10 to get the deficit effect of fraud that we've stopped, that the vice president's team is stopping. And so we're 100% focused on the deficit in the long run, but we also at times, when we spend less money on international organizations, we can spend more money on the defense things that keep us safe. And so we're changing things within the bundle, but we're definitely shooting for lower deficit over time.
Just combining these two ideas, Director Hassett, of taking action and what you were mentioning before with higher oil prices. This is a president who has signaled out big oil, both Exxon and Chevron specifically, amid this ongoing crisis. What steps is this White House going to do in order to act on the idea that big oil is contributing to the inflation we're seeing in higher prices?
Well, I think that big oil is heavily concentrated in the U.S. is something to keep an eye on. But the bottom line is that the global energy price story is a positive one compared to what people thought, and I think that the things that made it positive are going to make prices drop very, very quickly once this is
Sorry, Director Hassett, when you say too concentrated, they're just too big. Is it a kind of an antitrust issue, you think?
As an economist, you can look at something like the Herfindahl Index and just think about what share of the market does any business have, and that's something that is a source of investigation for people at the FTC and the Justice Department. It's not something that's within the purview of the FTC.
Understood, Kevin. Thank you very much for your time this morning. That's the White House National Economic Council Director, Kevin.
What are we going to do?
We have been together for years.
Yeah, how long is years, Mike?
It would be measured in decades now.
Got it. Understood. What a great way to start the conversation. Like, Mike, I know you well, and I know your comments well, and tough questions you ask, so definitely appreciate all those. Let's get a check on your markets, because, Mike, they have been changing over the past 15 minutes as we've been speaking. We are looking at 10-year yields. They're still coming down, but not as rapidly as they were. We're down about 3.5 basis points. Oil is now rising only slightly, but about 0.3%, and the S&P, its gains are also starting to lessen too, up only 2 0.2% as the Nasdaq moves higher by 0.5%. Coming up, we're going to get more on payrolls and break down some of those Kevin Hassett comments. We're going to speak to Julia Coronado of Macro Policy Perspectives. You're watching Bloomberg Open Interest.
Your clients look to you. You look to T. Rowe Price. Because we stay agile, actively managing investments to uncover opportunities and build ETFs designed to outperform the index. That's the power of curiosity. Better questions can lead to better solutions. T. Rowe Price. Invest with confidence.
Can master your strategy, but performance could be limited by your instrument. Precision trading starts with the right instrument. Over the past 3 years, Interactive Brokers clients outperformed the S&P 500 on average. Like returns, trading costs compound. Interactive Brokers is built to lower costs through smarter execution. Access stocks, options, prediction markets, and more across 170 plus global markets. The best informed investors choose Interactive Brokers.
So I've heard Fisher Investments is a fiduciary.
Calm down.
Yes.
Calm
We
down.
always put clients first, even if that means a little straight talk.
Like what?
We tell our clients what they need to hear.
Yeah, but
Like if their lifestyle might lead them to outlive their money.
good at prayer, keep the
Other
money.
times, we keep clients from making big investment mistakes that can impact their future.
We'd want to know that too.
At Fisher, we use a disciplined approach, keeping you on track for a comfortable retirement. At Fisher Investments, we're clearly different.
Think Invesco QQQ is one bright idea? Rethink how our Innovation Suite ETFs open up a world of innovation. From flagship access to the Nasdaq 100 to income, low volatility, equal weight, and more. All designed to help investors shine.
Before investing, everyone consider fund investment objectives, risks, charges, expenses, and more.
Money.
Investor discovery prospectus at Invesco.com.
That's brilliant.
Data storage used to be straightforward, but AI has rewritten the rules. The data it needs to thrive is trapped in aging infrastructure. In fact, less than half of enterprises report that their data is AI ready. That makes initiatives stall before they start. Instead of fragmented systems, companies need a unified data platform, one intelligent layer that delivers data at the speed of AI. Because good enough isn't good enough in the AI era.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Because of deportations and the retirement of the baby boomers, that labor force participation is kind of on a downward trajectory, which means that the break-even jobs number, that is the jobs number you need so that unemployment rate doesn't go up, has gone from maybe 120, 130,000 a few years ago to maybe about 40,000 now. And so what it means is that what the market is used to looking at, it's like a normal tread the water kind of jobs number that's around 100 is no longer true. If you get a number like 100, then that's really like a great number and should make the unemployment rate go way down.
White House National Economic Council Director Kevin Hassett speaking on the jobs print, which surprised to the downside, a surprise contraction of 23,000. Joining us now is Julia Coronado, a former Fed economist who now runs Macro Policy Perspectives. Julia, perhaps as expected, this White House is viewing it in the most positive light possible. This market is viewing it as taking the rate hikes off of the table. I'm wondering how you're viewing these figures.
Yeah,
Is there signal in them, or is it just noise and something maybe to ignore for the month?
Well, there's always some signal, and I think, the trend that we're seeing is, yes, there is a shrinking labor force, and that reflects both immigration and it reflects aging, and it may also reflect weak demand, and this is where the signals get complicated. Wage growth is very weak. There's a lot of low participation, not just amongst older workers retiring, but amongst younger workers who are staying in school. The part-time share is rising. Consumers assess very weak conditions in the Conference Board survey. So it's not all structural. I think there is some evidence that, the labor market is broadly balanced, but it's tilting a little bit to the weak side, even factoring in all of those structural and noisy elements.
hold because they didn't know what tariff policy was going to be, because they didn't know what the war was going to produce. But we've kind of seen that now, and we kind of know what the tariffs are going to be. Why are businesses holding off when we see fairly strong demand?
So, Mike, I think that's a great question. There's just so many sources of uncertainty. There's just been massive shocks across sectors, from tariff policy, from shifts in regulatory policy, from changes in the drivers of GDP growth. The war is far from over. There's an election coming up that could change the policy landscape. So the uncertainty is just kind of elevated, seemingly permanently, from a range of policy
Order filled.
and shifts that leave businesses. And I think what we've seen is that businesses have, they're not hunkered down in the corner. They're moving on with things. They're learning how to navigate permanently elevated uncertainty and frictions. But nonetheless, they're still cautious when they're making these hiring decisions. They're still looking to do that as minimally as possible and really keep control over their cost base. So it's not a very growth positive labor market. It's a labor market where, yes, some people are getting hired, and on net we're seeing job gains over sort of 3, 6, 12-month averages. But it's not very strong. There's outside of the kind of AI build-out, there's not a lot of growth momentum.
Just to that point, looking at the jobs figures, information adds 11,000, manufacturing 5,000, construction 22,000. These are all sectors you could point to, Julian, to your point, saying AI is largely contributing to that. Does the concentration of this economy around AI concern you at all, or is it a theme that's just so robust that you think it can continue to carry us?
Order filled.
I needed that 250.
A little bit of both. I mean, I think there's enough momentum, and the CapEx planning is so significant and sticky. It doesn't change on a dime. That I do think there's enough momentum in this sector to carry the macro economy for a bit. But yes, I'm concerned about the narrow base of growth and how leveraged we are to these very, very high valuations, and a lot of just kind of assuming the best in terms of how this build out will, what the ROI will be, which I think is actually quite uncertain. And usually these technology leaps, and I do think it's a real technology leap, there's no doubt about that, but they always come with some more kind of friction and volatility, winners and losers, sort of complicated adoption that's stretched over quarters and years, not months. So I think it's far from clear that best case scenario is the most likely, and so therefore, we are kind of vulnerable if the confidence in that build out and that ROI is shaken, then we don't have a lot to fall back on.
Let me ask you the question I asked Kevin Hassett. He took credit for the labor force falling because of their immigration policies. And I'm wondering, what do you think about potential growth going forward for the country, if that is such a good thing?
It's, generally not good for growth. It definitely lowers the speed limit, so you can make the choice to be a low immigration economy. Japan made that choice in the past and saw, kind of very, very low potential growth. Even if you factor in strong productivity, if you've got a shrinking labor force, your run rate, the administration had promised 3% growth. It's been, below 2 in the first half of the year. And with a shrinking labor force, you're going to struggle to get much above that. So if you're judging your success by the absolute growth, that immigration policy is bad for growth. And in general, we've also seen there's lots of research showing that immigrants are accretive to productivity. So can you have productivity without those high-skilled immigrants in the tech sector, without the medical sector immigration? So that's still an open question, I think.
Okay, Julie, we're going to have to end it there. Thank you so much for joining us, Julia Coronado of Macro Policy Perspectives.
thought it was dead actually.
When news breaks, Bloomberg has you covered. SpaceX second quarter revenue, $7.8 billion. For all the context and clarity you need,
A lot of speculation. What could happen with Tesla?
hear it first on Bloomberg.
They said that it couldn't get any better, but it just did. Meet the all-new Patriot Power Generator 2200X, our most powerful portable solar generator ever. Right now, during our launch event, you'll get two 100-watt solar panels, absolutely free. No gas, no fumes, no noise. Just reliable, renewable backup power strong enough to run the fridge for 3 days straight. A freezer, even critical medical devices from safely inside your home. You gotta act now to get the new Patriot Power Generator 2200X and two free 100-watt solar panels.
If sitting hurts, it's not just age, it's your chair. Most chairs push on your lower back with a lumbar support, but that's not how your spine actually stabilizes. It's time to fix your sit with Anthros. Our precision posture system has two unique supports for restoring your natural S-curve and reducing disc pressure by up to 40%. Try Anthros for 60 days risk-free. If your body doesn't feel the difference, your money back. It's time to fix your sit at anthros.com.
These bills are crazy. She has no idea she's sitting on a gold mine. She doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy. Even a term policy?
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-383-9200 or visit coventrydirect.com.
Watch this.
Order
I'm
filled.
gonna spray a regular household cleaning product.
Come on.
Sans uses precision laser sensors to detect
Order
anything
filled.
harmful in your hair. That color's gonna change and the number's gonna skyrocket from those cleaning products. Sans can trap pollutants, allergens, dust, pet dander, gases, chemicals, odor, smoke, and much, much more. And just like that, the color is returned to blue, the number has fallen, and we know we've got healthy, clean air at home.
We made the switch to Coterie diapers. Our baby started sleeping better through the night and we had way less diaper changes. The material is incredibly soft, thin, and luxurious. It feels like clothing. If you want the best of the best for your baby, try Coterie. You won't regret it.
The U.S. unexpectedly lost 23,000 jobs
Order
in
filled.
July, raising fresh concerns about the consumer. But shopping center operator Tanger is seeing resilient spending with tenant sales up 6%. Joining us now is the CEO, Steve Vignala. Steve, great to see you this morning. And Mike was just pointing this out in the break that 19,000 jobs were lost in retail. Are you seeing anything to that degree in your centers?
Yeah, we haven't seen the impact of that yet.
Come on.
From both a sales and
Come
traffic
on.
point of view. So
Little lower.
customers still spending. And you know what's interesting, in our business, you know, we always say that the retailers are going to be in the stores where they see the most amount of customers.
Order filled.
I, over the past month or so, have been out in a number of our centers. We talked about Levis. We bought a new center, and the stores are packed with merchandise. And I think it's in advance of that very important back-to-school shopping season.
Well, are they
Order
still
rejected.
reacting to tariffs? We noticed that the inventories are starting to rise again.
Yeah, well, look, I think that tariff pricing impact was last year, and I think the consumer accepted it. It was absorbed, and spending continued to rise. Now what we're seeing is a reset in pricing, but yet in our value channel, there's still a savings off of that new high in price, and I think our customers still feel pretty comfortable that they're getting the best possible value for their money.
Well, kind of the big macro impacts on the consumer. One, what Mike mentioned with the tariffs, and two is higher prices for oil. And some of the earnings that we've seen specifically among restaurants, a lot of the commentary is less traffic, but when they're coming in, they're spending more. And that might sort of relate to people making less trips. What about at your outlets? Are people making the trip less often, but doing all their shopping at once and buying more when they go there?
You know, that's not what we're seeing. So what's interesting about the outlets, you know, the old narrative on outlets was, yeah, it was a specific shopping trip that maybe you made once a season. But we're finding that the population shift has brought more people per permanent population to the markets where we have shopping centers. And in response to that, we've been re-merchandising these centers. We've been adding more food and beverage, more entertainment, things that are going to draw the customer, going to hold the customer, and ultimately get that multiple visit as opposed to that one seasonal specific visit to the centers.
What are your tenants telling you about their expectations for the future? And I'm putting this in the context of weak consumer confidence, rising credit card delinquencies, pay falling behind the level of inflation, and the savings rate going down. It all seems to be adding up to more bad news ahead for retail.
Yeah, look, NRF predicts that this back-to-school shopping season is going to be the biggest of all time. And you're right, we live season to season in the retail business. So that headwind that we're facing that could be something that the customer might encounter going into the holiday selling season. I think we'll see the retailers respond with better value, better opportunity, which is going to drive the customers into the stores and hopefully create more conversion.
Louis, you are or were, I guess, in a lot of the World Cup cities. I think 8 out of the 11. Did that drive traffic at all?
It sure did, and it not only did it drive domestic traffic, but international traffic. And there is nothing more fun than being out in one of these host cities, like Kansas City. We have a big shopping center in Kansas City, and just seeing those customers, the international customers, encounter Americana for the first time. The things they see, the Buc-ee's or the Chick-fil-A's or the movie theaters or the barbecue, the things that they're posting on Instagram.
Did they drink the restaurant establishments dry as well? Did the Scots come in?
I think the city of Kansas City was pretty dry, but they got it back pretty quick.
You mentioned the holiday season. Is it too early to kind of predict? Well, I guess it's not, because the retailers have to be ordering now for the holidays.
Yeah,
Order filled. Order filled.
Particularly in the outlet channel. It always seems to us that the customer, macroeconomic headwind notwithstanding, we see a lot of traffic for the holiday season in our outlets because we're showcasing the best brands in America, from Polo to Coach to Tory Burch to Nike.
Order filled.
So if you're looking to stretch that spend over the holiday season, they can do the execution in an outlet is probably the best place where shoppers can come and get the most for their money.
So historically, a landlord would probably just be collecting rent checks, but things have changed so much, especially with data, now AI-powered data, and I know you have a platform you're offering too. What exactly are you doing there?
Well, first of all, we're not an AI company, but we use AI to optimize our business. I think that's really an important distinction. There's so many use cases out there today that AI allows you to optimize, just make your people smarter, make your people more efficient, make your people better. But the biggest touch point for us is really the marketing end, because what we find is that customers are far more likely to open up our SMS messaging, our text messaging, our email messaging.
They can't. Holy shit.
So AI has allowed us to become far more personal. We understand who our customer is. If they've opted into our Talent Club program, and we have millions and millions of people in that program, we can then go back and we can reward them for their loyalty, and we can hit them with advertising where they are, but more specifically with the brands that they want. So we're training them to open up the messaging as opposed to just delete it.
Just really quickly, because there's this big debate happening now, does it replace legacy software? Could you see Tinker moving in a way that you get more native with AI, and maybe other services you've used from other companies, enterprise services you don't need, you can kind of bring it in-house with these tools?
Well, we're in the early innings of that. So we've already, we use a program called Yellow AI to handle our customer service and chatbot that handles over 50% of the interactions with customers is done by chatbot. Now, if a customer gets frustrated or has further questions, they'll go to a person. I think what happens is that AI platform allows us to take a lot of that day-to-day, real quick questions off our plate and then put them in the hands of the professionals once they get challenged to a place where they really want some customer service. I think that's, for us, that's the first entry point into it. We're seeing such great success with that we know that the future for us is to interact far more than we are currently with
Steve, really appreciate your time this morning. Thank you for stopping by. That's the Tanger CEO, Stephen Yalof. Let's now get a check on markets. It's over an hour into your trading day. Off of the highs, but still up 0.5%.
Not happening, bro.
Higher by 0.7. That's being aided by a surprise downside to the jobs figures, which we've been discussing. That's allowing yields to come in for 10-year by 4 basis points. The front end of the curve drops even more dramatically this morning, as you would expect as we start.
Order filled.
Down by about 6 basis points. Let's look at the single name movers with that. Is Norma Linda. Hey, Nora.
Hey, Danny, a tough day for Sweet Green, tumbling to its lowest since April. That's after the company slashed its annual guide. Customers are quitting fresh prepared foods during the Cyclospora outbreak. The salad chain says it expects sales to fall as much as 8% this year. Shares of Sweet Green down about 8% as we speak. Now sticking with food, Wendy's trying to gain some ground after withdrawing its 2026 outlook and cutting its dividend following a sales decline in the second quarter. The CEO is looking for flexibility to invest in the company's turnaround plan. Shares up just below 2%. And finally, DraftKings climbing despite missing expectations with growing competition from Kalshi and Polymarket. The company says, though, that business stayed strong even after the World Cup, giving the CEO confidence for the rest of the year. Be honest, guys, did you guys place any World Cup bets? It seems as though a lot of people were. Well, shares are up about 5.9%. Those are your morning movers. Danny?
Nora, thank you very much. Can't say I did. Norma Linda there with your movers. Mike, any sports betting?
No, I was going to bet on whether you bet on it, but...
Oh, that's it. I'm sure you could create that trade, because you can literally gamble on anything these days. Coming up, we're going to talk not gambling,
What is
activist
this?
investing,
What's
pushing for
left?
major changes at Ethan Allen. We'll speak to the company's CEO. That's coming up next. This is Bloomberg.
Brought to you by Empower. Invest well, live a little. Join our 20 million customers at empower.com.
Franklin Templeton ETFs. With over 80 ETFs, we have solutions for every market, helping advisors build the portfolios of the future. Today, Franklin Templeton, our trusted partner for what's ahead.
Modern enterprise. There's a lot of moving parts. Comcast Business helps you orchestrate it all with SD-WAN that keeps 150 hospitals working as one. Zero Trust Security that protects data for a bank with more than 2,000 branches. And AI-powered networking that's optimizing traffic across 5 continents. You might need this. It's simple. When you add it all up, no one does business like Comcast Business.
Thanks for walking us through the plan.
Have fun with Lizzie this summer.
Doors connect us to what's important. A dedicated Fidelity advisor can help you open those doors. Backed by a team of specialists, they'll help you build a personalized investment strategy. Doors were meant to be open.
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets.
When I started Walton Goggins Goggle Glasses, I didn't know how to turn all this fancy prettiness into a classy-looking logo. But GoDaddy Aero does, with its magical AI powers. It not only creates it, it slaps that sweet thing everywhere.
What are you doing? We need to save time. Just happened.
I just saved time. By buying a car in Carvana, it was all online. Got pre-qualified instantly. Great terms. Save time and buy your car in Carvana.
Why be at the forefront of childhood cancer research? At St. Jude, we do it because every innovation we make is a moment we give to children with cancer everywhere. But we can't do it without you. Help St. Jude give children with cancer more moments. Moments that can last a lifetime.
Order filled.
Precise designs, subtle curves, curated upgrades, elevated design for thoughtful living. Puma.
This is Open Interest, and you're looking at the principal room. Coming up,
Come
an interview
on.
with Lyft CEO David Risher on Bloomberg Tech.
Order filled.
Activist investor shares are up this year of Ethan Allen and continue to rebound since hitting lows in May. Here with us now is Farooq Kathwari, Ethan Allen chairman and CEO. Farooq, really great to see you this morning. Thank you so much for coming in. I would love to just give you the platform and the chance to respond. Bergeron there saying you're like a tobacco company. You're sitting on cash. Sales are dropping, yet you're still paying out dividends. He called your company a melting ice cube. But what is your response and your message to the activist investor?
Well, first of all, it's good to be here. My office is about 2 blocks from here, so it's not a long distance. We have an Ethan Allen Design Center here on 56th and Lexington. Well, my perspective is that we think long term. We have been doing, and Ethan Allen's been around for 94 years. I've been around there for close to 40 years. We have given in the last 20 years of close to $1 billion in dividends. We have invested a great deal in capital expenditures. We have repositioned the company, and we continue to do that. For instance, almost we have today our design centers, our stores are called design centers. We have now reduced the size of our design centers by 50%, from about close to 15,000 feet to an average of 7,000 or 8,000 feet. And the reason I'll give the reason why we've done it. We are a vertically integrated company. We had 20 manufacturing plants only 8 or 10 years back. Today, we are focused in Vermont, North Carolina, Mexico, and Honduras. We had about 15 national distribution centers, 100 warehouses. Today, we have 1 national distribution center. A lot of this has been done in the last 6 or 8 years. Now, because this was the time of a lot of reinvention, a lot of focus on changing the size of our design centers. We have less interior, we are our business of interior designers. We have today about 30 to 40% less interior designers than we had 4 or 5 years back, but much stronger. Technology.
And Farooq, that's all and well and good, but if I am channeling Douglas Bergeron, his argument would be it doesn't matter because top line sales have decreased from 2007 to being $1 billion to nearly half of that amount. So his argument is basically something has gone wrong. Why are top line sales then decreasing so much?
Well, because of the fact that we have focused on interior design. We have not focused on selling to a mass. Now, interior design, the customers that we have has been more greatly impacted in the economy, has been impacted with all the issues that are faced with. Now, we could have increased our business by expanding our reach and going all over, but we didn't. So we felt it was important for us to maintain the credibility of our interior designers, maintain the credibility of our customers, and that has affected. But the good news is that they're coming back. We have reduced the size of our interior design by 50%. We've reduced the size of our interior design centers by 50%. So if we had done, that is, expanded our reach all over the place, they said, and I know the arguments were, we would have sold a lot through digital mediums, we would have sold through Wayfair and all those things. We felt that we could have done that. I'm not saying we would have gone up, but we felt that it was not the right thing to do. We wanted to maintain the credibility of we have one of the largest interior design network. So taking care of them was important, and we said it's better for us to reduce, take care of them, and then go back, and during that period, reposition everything. We have now repositioned our design centers. They're 50% smaller. We repositioned our manufacturing, logistics, and we are now, and a lot of technology. I know one of the arguments where we are not in technology. We have a lot of technology.
Well, that's one of the points that Bergeron makes. Is he argues that the stores are outdated and that you don't have a big digital presence, and that's where retail is going.
No, actually our stores are not outdated. They're actually much more current than they've ever been. In the last 4 or 5 years, we have repositioned our design centers both in locations and size and making them look beautiful. There's one right, 2 blocks from you here. You take a look at it. We used to have 3 years back one on 30,000 square feet right on 59th Street and 3rd Avenue next to Bloomingdale's. We have reduced the size because today technology and interior design is playing a tremendously important role.
I wonder if because one of the things that Bergeron said was that in your 10K, and you've had kind of this boilerplate language in there for most of your annual filing, saying that if there is a consumer shift into online, it's a threat for Ethan Allen. And he says that's outdated for 2026.
No, that's not the case. We are come to our website, we encourage them to meet our interior designers. That's why our business on the website is less, because we want them to interact with our interior designers. When they do that, our sale is 3 to 5 times more when a customer interacts with an interior designer. So yes, it is the fact that we are not doing a lot of business on the website. We also decided that it was important for the customers to interact with our designers, so encourage that.
Right, and I know this has been your model, right? As you've been emphasizing sort of interior design over online. Farouk, there's one specific thing that the activist said that I want to give you a chance to respond to, because he didn't just talk about the company as a whole. He talked about you yourself, and I think it's important for you to be able to respond to that. So just for our audience, in case they didn't see, I know you saw the interview, just to show what he said, here's specifically what Douglas Bergeron had to say on that.
Farouk Kathwari deserves a lot of credit for the company that he's been running for 38 years, but he's 82 years old. Farouk has managed to lose market share in good markets, good housing markets, and in bad housing markets. Right. The press we're getting with the proxy campaign will, I think, allow us to go out and find a very, very compelling CEO that can help transform this business.
I mean, he's saying he doesn't want to just replace the board. Farouk, he wants to replace you.
I know. I think that, his statements are very, to me, amazing and wrong to attack personally on age. I know that I checked him out. He's about 66, 67 years old. And I could say he looks 95. I won't say that. I won't say that. I look much younger than I am, because I am. I'm a mountain climber. I'm a sports person. I have a boat. I have a farm. So, yes, the fact is, if I believe that I don't have the energy or the ability or the mind to run a business, then I should not be doing it. Our board, everybody else, has never raised this issue. They know that I'm more active than somebody who's 30 years old.
I haven't climbed any mountains recently, just to underscore that point. I have not done that.
No, I like hiking. In fact, my son just bought a house in Aspen, and I'm going to go there so we can climb some mountains there.
Well, that'll be fun. But where does this go in the meantime? Now, Bergeron has a rather nuclear kind of proposal
Win
on the
percentage
table,
of
and I assume that's
69%.
rejected out of hand.
Losing
Is there any way you work with him to do
30%.
any changes?
Well, look here, we're always there to talk to people, to listen to people. He's here talked to me before, and I'd be happy to talk to him. I think that our board is a very distinguished, knowledgeable board, experienced board, and different areas of expertise. We're one of the strongest boards.
Order filled.
I know their focus is that we should do something short term, we should build a lot of business, we should do e-commerce and everything else. But we could do all of those things, but we have not done it because we want to continue the process of having an interior design network focused on great quality, great service, and we basically think of this. We deliver our products to our customers at the same price whether you're living in Seattle, Chicago, Miami. That doesn't happen by accident. It is one of the very strongest network of logistics, manufacturing. Our interior designers are very, very strong. Yes, in the last few years, we have been impacted with all what is taking place in the marketplace. Now, we could have increased our business by going to other channels. We could continue the focus on interior design. We're very well positioned, and we give good dividends. We've got good cash, and we're going to continue to do that.
We really appreciate your time coming in and discussing this with us. I know this isn't your first time with an activist, so perhaps you have some practice going down this path. Again, thank you so much. We really appreciate it. That is Farouk Kathwari.
Come on, bro. Come on, bro.
I always like it because, first of all, as I said, in Hudson, New York, I have the farm. I actually give this book. You should read it.
Are you serious?
Trailblazer, which says from the mountain of Kashmir to the summit of global business.
Come on, bro. Come on, bro. Come on, bro.
Digital magazine.
Come on, bro.
It shows me in my phone.
People pay money to get this ad space, so we're going to have to go and pay our bills and go to commercial break. Thank you again for joining us.
Come on. Come on.
Been interested
to you by Interactive Brokers. Trade prediction markets
Come
alongside your
on.
stocks and options. The best informed investors choose Interactive Brokers.
No.
This is Luke Ganade, who spent
Come
11 years
on.
living
Really?
off those savings.
Order
Fuck.
filled.
With their advisor Matt's plan, Earn and Save became Invest and Spend, and now
Oh, gosh.
JP Morgan Wealth Management.
With a shield leveling move from Bright House Financial, your portfolio can benefit from growth potential with a level of protection from market volatility to help you follow your plans wherever they take you. Bright House Financial, built for what's ahead.
I wanted to have control over drinking instead of alcohol having control over me. I started with Or Health about a year ago. It put the brakes on that I had been looking for. I can drink less and say no, and it's the best feeling in the world.
Text TV to 710 to learn more.
Come on, bro.
If you haven't learned to use options yet, you're missing out. Options are tools
Order filled.
to generate income and manage portfolio risk with less capital than you need to own the stock. This can be especially beneficial for
Order
small
filled.
individual investors. That's why today, learning to use options
I can't. This is not.
will teach you our
There's no.
strategies for free. Get your free copy at itsnotanoption.com. It's not an option.com. That's itsnotanoption.com.
Welcome to Bloomberg This Week. I'm David Gordon.
I'm Lisa Matei. I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling.
Are you fucking kidding me?
Provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some
How?
key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Order filled.
Closer to a deal on the Strait
Come
of
on.
Hormuz. Iranian lawmakers are still debating the terms, including potential restrictions
Come
on
on.
U.S. and Israeli
Come
food
on.
shipping. Bloomberg Washington
Come
correspondent Tyler Kendall
on.
joins us now from Camp Grayling
Come
Army Base
on. Come
in
on.
Michigan. And Tyler, I know you've been having conversations over there with various
No.
military leaders. I wonder to what degree it seems like this will be a non-starter, a proposal to open the strait, but not to the U.S. and Israel, and charge high fees
Order
for
filled.
people who have attacked Iran.
You can't make
Well,
this
David, it appears
shit
very
up.
evident that the U.S. is not going to be in favor of any sort of restrictions, including when it comes to potential compensation in order to use the Strait of Hormuz, even as the U.S. is pushing for that critical waterway to open as soon as possible. We did hear from President Trump last night telling reporters that there was progress. He said that the talks were, quote, moving along, but he also answered critically when it comes to the idea that as the conflict keeps going on, the U.S. is running low on munitions. President Trump disputed recent reporting when it comes to our U.S. stockpiles. But I would point you to some new documents provided to Congress when it comes to the fiscal year supplemental budget request related to the conflict in Iran. $67 billion that the Army is asking for. That includes about 18.2 to replace those high-end weapons like Patriot missiles that we're seeing being used in the conflict. And I just spoke to the U.S. Army Secretary about this, who says that they are trying to ramp up production with companies as quickly as possible.
Hey, Tyler, thank you so much, and we're looking forward to hearing those conversations. Bloomberg's Tyler Kendall at Camp Grayling in Michigan, and Army Secretary Dan Driscoll. The conversation between him and Tyler will air on Balance of Power. That is it for Open Interest. Have a great weekend.
Bloomberg Power Players returns to New York, powered by Bloomberg's award-winning journalists. Front row conversations with the voices shaping the future of sports and business, where game changers connect from the boardroom to the locker room. A place for bold ideas, powerful insights, and high-impact conversations. Every sport grounded in Bloomberg Insight.
Order filled. Order filled. Order filled.
Power Players New York, September 10th, 2026.
There's gonna be super.
Look, if you're an executive, this shirt is a must-have in your closet. I was tired of floppy collars and shirts with sweat stains, so I got this shirt I saw on TV, and now I don't have to worry. I got it shipped in no time, and I switched from regular polos to this immediately. The brand is called Collars & Co. They make a regular stretchy golf shirt, but the top is a firm collar.
Meet the all-new Patriot Power Generator 2200X, our most powerful portable solar generator ever. And right now, during our launch event, you'll get 2 100-watt solar panels, absolutely free. No gas, no fumes, no noise, just reliable, renewable backup power strong enough to run your fridge for 3 days straight. A freezer, even critical medical devices from safely inside your home. You gotta act now to get the new Patriot Power Generator 2200X and 2 free 100-watt solar panels.
These bills are crazy.
She has no idea she's sitting on a gold mine.
Well, she doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy.
Even a term policy?
Even a term!
Find out if you're sitting on a gold mine. Call Coventry Direct today.
Come on.
383.
Come on, bro.
Visit CoventryDirect.com.
Come
Watch this.
on, bro.
I'm gonna spray a regular household cleaning product in the air. Sans uses precision laser sensors to detect anything harmful in your air. That color's gonna change and the number's gonna skyrocket.
Come
from
on,
those
bro.
cleaning products. Sans can trap pollutants, allergens,
Come
dust,
on, bro.
dander, gases, chemicals,
This is
odors,
gaslight
and much
all
more.
the way, bro.
And just like that, the color is returned to blue, the number is fallen, and we know we've got healthy, clean air at home.
Come on, bro. Come on. Come on, bro. Come on, bro. Come on, bro.
Of Silicon Valley with Ed Ludlow in San Francisco.
Come on, bro.
This is Bloomberg Tech. Coming up, the jobs market's cooling with US
Come
employers
on, bro.
unexpectedly cutting jobs in July, and
Come
AI
on, bro.
may be part of the story. Plus,
Come on,
tech earnings
bro.
back in focus will be joined by the
Come on,
CEOs
bro.
of Twilio, Lyft,
Come
and
on, bro.
DraftKings on their results. And
Come
OpenAI's
on,
first
bro.
consumer device will be an
Come
AI
on,
smart
bro.
speaker that will look like
Come on,
a
bro.
donut. We'll have the details.
Come on, bro.
This is what markets look like
Come
this
on,
Friday,
bro.
Happy Friday. To you, it is a story about jobs data.
Come on, bro.
100 up, 0.8%. Some outperformance in chips and US 10-year yield. I picked the US 10-year yield because we saw a move across the curve.
Damn.
Why not? 4.64% on the yield. We need to get into the numbers. Is there an AI story? Bloomberg International Economics and Policy Editor Mike McKee is
Order
with
filled.
us. Start with the numbers themselves. Like, what did the data show this morning in simple terms?
Well, basically, we lost jobs for the first time in many months, 23,000 jobs. Last time we lost some jobs was in February. Now, why did that happen? A lot of it was government jobs. Local government education fell by 50,000. So it's not as bad as it looks on the surface. And unemployment fell to 4.1%. The reason for that is because the labor force shrunk again, 240,000 fewer people looking for work, which pushed unemployment down to 4.1%. If you're not looking for work, you're not unemployed. But the good news and the
Order
potential
filled.
AI story here is that on the positive side of the jobs numbers, we saw a lot of hiring in the sectors that AI touches, especially in construction for AI data centers, etc. Specialty contractors and non-residential construction, almost 20,000 jobs in total as demand for workers in those areas continues to really ramp up. And then you look at the manufacturing side for computers and semiconductors, and they added jobs as well that we haven't seen in a number of other categories. So, Ed, at this point, it looks like AI is one of the few areas that did well last month, and it doesn't show any signs of really slowing down.
The legend, Mr. McConomy, Bloomberg International Economics and Policy Correspondent, Mike McKee. Thank you very much. Let's stay with that jobs impact. Joining us is Sarah Franklin, that is CEO. And, you know, Mike made the data so clear. Where there were gains were in industries that are seeing AI capital deployed. Construction of data centers, for example. Your interpretation of those data points?
Our interpretation is that this isn't a
plans for like this year, next year, all the time. Do you see any evidence that they're restructuring the composition of those workforces?
Ed, we do. We see that companies are now through the chaos that we had the last several years where there wasn't predictability, and now companies are planning the long term. They're understanding what AI is good for and what it's not. They understand it much better than we did a year ago. So you're seeing companies recalibrate their workforce. You're seeing forward deployed engineers. You're seeing people understand how AI can help them. And people are also realizing that just because AI is here doesn't mean that the work isn't. You can't just lay off a lot of workers and the work go away. You still need the knowledge. You still need the trust that you have in your company and the culture. And you see companies saying, okay, we need our people, but we need to invest in their skills, not severance packages. We need to help them come along with this new trend. And so again, it's a recalibration of the workforce, and it's a transformation that every company is making, and they're planning longer term.
How competitive is compensation right now for existing workforce, but also if they are bringing people in specific subsectors, the need to pay to get those best people?
Yeah, I mean, this is a reality, is that people with the skills and demand will be able to command solid compensation. And as costs rise, so do wages need to as well. And this is, again, a recalibration that you're seeing in the workforce. And it's a call to everyone to make sure that you are skilled in AI, that you understand and are proficient in the technology skills that companies are hiring for. And it's a tried and true thing that if their skills are in demand, companies will pay for them.
What's one thing that you're seeing through the Lattice platform that surprised you since last you were on the show?
So something that's surprised me is how a lot of companies are coming to us and saying, Sarah, we just want to get back to business basics of how we manage our workforce, how we understand the performance of our workforce, and really that workforce intelligence. And so the basic habits that you need from all the way from your executive suite to your individual contributor to understand how people are performing, how their work relates to the outcomes of a company, that is what's the back to basics is so powerful right now.
So you're using the word performance. What was so interesting this morning outside of sort of the technology context was how quickly the conversation goes to productivity, right? When you get a set of jobs numbers, all these different fixed income, maybe they're in the equities market saying, we're starting to see AI-driven productivity in the economy. What's the sort of workforce evidence of that?
Well, the workforce evidence is that what you're seeing is people are able to really do more, but in a way that is strategic to the business. It's around helping AI automate tasks that used to distract your time and attention. And when you can put your time into strategy, really thinking of how you're going to grow, because you don't shrink your way to growth, Ed. This is every company is thinking, how do I grow? How do I perform? How do I unlock the human potential? And Lattice helps all of our customers do that. And that's the frame of mind that all of the companies are in right now, is how do we grow and how do we use our existing workforce, invest in their skills,
Right.
invest in how AI can help them to grow.
That was so beautifully succinct, how AI can automate a task that would be distracting or take up your time. If somebody's good at AI and is good at allowing AI to do that time consumption for them, are they able to then turn around and command higher compensation?
They are, because they have the knowledge that is immediate, that can augment their skills and expertise. And that is how, even today, the jobs reports information is something which AI helps me deeply understand everything that's going on, nuance. I don't have to spend an hour doing research. I can get the information very quickly. And that is how I can then show up with my perspectives as a CEO of a HR tech
multi-day move as the lockup expired for as many as 912 million shares. That's worth roughly $100 billion, but follows a 40% plunge Wednesday after SpaceX's first earnings report as a public company, which showed higher than expected AI spending. One of the catalysts right now is Argus upgrading the stock to buy, pointing to a rapid payback from those AI investments, a $160 price target, but we remain pretty firmly below the IPO price of $135 a share set in June. Okay, coming up, earnings season continues. Twilio just beat analyst expectations for its second quarter, blew past them really. We have the CEO, Cosima Shipchandler, with us next. This is Bloomberg Tech.
Thanks for walking us through the plan.
You guys heading up north soon?
Yeah, got Lizzie for a couple weeks this summer.
Taking her fishing, I hope. That's the plan. Doors. Connect us to what's important. A dedicated Fidelity advisor can help you open those doors. Backed by a team of specialists, your advisor helps you build a personalized, tax-smart investment strategy, identifying opportunities across your entire portfolio. And when life surprises you, your plan can change too. Because doors are meant to be opened.
The joy of traveling well is feeling at home, yet a million miles away from home. Discovering new flavors, or savoring the ones you already love. Not knowing what lies beyond the horizon, but knowing what matters most to you. This is the joy of traveling well. Oceana Cruises.
Houses can be a lot like lungs, where they seem to be one thing until you take a look inside. Especially if you're living with COPD or asthma and still have symptoms like a wet cough with mucus that's hard to clear and infections that keep coming back. For some people like my mom, these symptoms can point to bronchiectasis. A CT scan of your lungs can help you get a deeper look. Talk to a pulmonologist to find out if it's bronchiectasis. Learn more at suspectbe.com.
1 second, Grandma. This guy's gonna buy my car. Okay.
You need Carvana. Entering plate number, no accidents, right?
No.
Generating offer. Carvana can pick it up tomorrow.
That's an amazing offer.
Sell your car the easy way with Carvana.
Simple setup, unmatched strength and stability. Minimal noise, maximum enjoyment. Simple enough for one, better with two. Explore bids and home essentials at Thuma.co.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Jennifer Zapasaja in the Lesotho Highlands, and this is Bloomberg.
Cloud communications platform Twilio reported second quarter earnings with strong results, beating analyst expectations on revenue and reporting record profitability and free cash flow. Yes, that is a stock that's up 29%, on track for its biggest jump since May of 2020. Twilio CEO Cosima Shipchandler joins us here in the San Francisco studio. It's a big stock move.
Yeah, I mean, we had a great quarter. You know, we were able to re-accelerate growth in the top line, grow our gross profits, and turn in record free cash flow and profitability. I mean, I think right now we're one of those kind of rare stocks that's able to demonstrate, you know, quite good financial characteristics, also reduce our stock-based compensation, and, you know, kind of position ourselves as an AI winner.
So an AI winner, I find that really interesting. I've tried to talk to as many people as I can about, is Twilio the predator or the prey in this AI world? And actually the response was they are AI proof. Essentially you have done deals with 4,500 carrier agreements, right? That is bulk messaging. Like that shows that you have a big place in this era.
Well, I mean, I think the way to think about it, it's actually 4,800, right? 4,800 different interconnections across 180 countries all over the world. Like, that's a level of complexity that is regulated. It requires like physical contracts that actually have to get done, and a very, very significant level of compliance that we make sure that our customers go through so that we protect consumers on the other side. And that complexity actually creates moat. And I wouldn't actually necessarily call ourselves predator or prey. I mean, the way that we position ourselves is as the Switzerland of kind of this AI era. I mean, we want to be infrastructure that any company can integrate to and be seamless based on what choices they've already made about
You do have AI-based or AI-powered messaging tools, for example. Those also show traction in the quarter gone.
Yeah, I mean, the interesting thing, to be honest, is that AI is a small part of the story, to be honest.
For you, right now.
For us today, I mean, it's certainly creating a little bit of tailwind, but in terms of its like material contribution to revenue, that is still relatively modest. And I think given the fact that we're relatively early innings in the AI story, there's a lot more tailwind coming here for the company.
Well, look at it another way. How many AI native companies, I know some people take umbrage with that phrase, rely on Twilio?
Thousands. That's the truth. But the reality also is that they are relatively small contributors to revenue, right? The reality on the other side of it is that enterprises, like they're the ones spending the dollars, right? So if you think about the contribution to revenue, that's really coming from much larger companies, even though we're super excited to be able to work with all these really creative AI startups, say Orion AI, Ultrabee, we all the way through to, a digital native like an Atlassian or, kind of even a leading home retailer that we pointed to in our most recent remarks. Like that whole breadth of capabilities that we offer to any company on the planet, like that's what gets me excited about the opportunity ahead.
Again, the stock is up almost 30% and on track for its best day since May of 2020, but up now 76% year to date. So you're getting the credit for it. The big picture academic debate is what does the world look like where a consumer and individual interacts with a real AI agent? And there are lots of parts of your business where you have to think about that future. How do you think about it?
I mean, actually, I think that provides even more tailwind, right? I mean, the future that we're literally planning for is one in which interactions are human to agent, human to human. That's going to require channels. We're also sort of making investments that anticipate the future in which if you're interacting with an agent, you've got to be able to know who they are on the other side. And so we're starting to make investments in identity, for example, through the channels that we already provide to our customers, and then using context as a means to be able to power this next era of agentic AI.
Prior to being CEO, you had other roles at Twilio, and I think a lot of people are looking at the bottom line and how structurally different the profit story for this company is. I think it's right to say that was a focus for you in your tenure as CEO of the company.
Yeah, I mean, it's been a focus, and I think we want to be known as people that are running the company well. We want to be financially disciplined. I think we have opportunities to make new investments, but frankly, we don't have to start a new investment cycle. We can take the cash flows that we're already generating, reinvest some of that back into the company, but also provide operating leverage back to our investor base.
We've had a very finance-focused conversation, and I'm going to end that way as well. You have before you double-digit organic growth, right? Kind of set out into the future. What's the biggest headwind or risk to that?
I don't see a lot of headwinds kind of sitting here today. I mean, look, we always operate in a dynamic macroeconomic environment. I think the AI story, it's a very long kind of secular tailwind. It's probably going to be bumpy from time to time. But as I kind of look through like the medium to long term, I see a lot of opportunities for the company, and we're ready for the moment. We're kind of hitting our stride, and we're very, very excited about what we're building and what our customers are doing, and it's on us to anticipate their next move.
Twilio CEO, President Shibchana, with the stock up more than 30% now. Thank you very much. Let's get over to New York, where Bloomberg's Yahira Anand is standing by with some news. Yahira.
Hi, Ed. It's time now for Talking Tech. First up, SK hynix is leading a record $83 billion in share sales by Asian firms, making July the highest ever monthly haul for firms in the Asia-Pacific region. And the South Korean company isn't slowing down with plans to spend $38 billion to expand its chip-making facilities in the country. Plus, AMD has plans to purchase Canadian startup Thales to build new AI chips, expanding the company's chip offerings as it tries to differentiate itself from competitor NVIDIA. Thales' technology is used in chips that handle inference and says that hard-wiring AI models into chips can create more efficient machinery. And Moonshot's Kimi K3 is the latest AI model to escape a sandbox in a third-party test. That's according to research firm Frontier Security. Kimi K3 joins the likes of models
anticipated release of Grand Theft Auto 6. Discuss that next. This is Bloomberg Tech.
Neil Jasani Tax Advisors, a national tax and accounting firm for ultra-high income households and mid-sized businesses.
A tax return and a tax plan are two different things. A return records what's already happened. By the time it's filed, every decision that mattered has already been made. A plan works the other way. We are a team of senior tax attorneys, CPAs, and enrolled agents who build multi-year strategy for people earning over $2 million a year.
Neil Jasani Tax Advisors, a national tax and accounting firm for ultra-high income households and mid-sized businesses.
Partnerships are a fundamental part of our DNA.
What we've done with Microsoft, what we're doing with OpenAI, is a force multiplier to many of those partnerships that we're building.
Mubadala, as a global investor, combining that local market knowledge creates a very special partnership that can allow us to drive more value in any investment.
And we have a history of investing early in people, systems, and of course institutions.
At T. Rowe Price, we help advisors move forward by building agile ETFs designed to outperform the index. That's the power of curiosity. Better questions can lead to better solutions. T. Rowe Price. Invest with confidence.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
OpenAI's first consumer device will look like a donut. According to sources, the AI smart speaker is designed to be carried around the home with one hand and is slated to be released next year. The device will be positioned as an AI-first computer that can help users get things done and will compete with moving and be complete with moving parts that help give it personality, and is likely to cost more than $300, those sources say. Don't have a picture of it for you. I'm sure we will see one soon. Look at shares of Take-Two Interactive, up more than 4% now. The company posted first quarter bookings beating estimates at $1.39 billion, but Take-Two kept its full year forecast below Wall Street expectations and trimmed its profit outlook. And of course, all eyes remain on the biggest release in the pipeline, Grand Theft Auto 6. Joining us is Bloomberg's Jason Schreier. I honestly kind of feel like we can park the performance in the quarter gone and the kind of financial outlook. It is all about GTA. You have been talking to the company about that. They are signaling that the pre-demand tells us something that this hasn't happened before.
Yeah, investors, it's funny, these bookings and EBITDA and revenue numbers, beating, missing estimates, doesn't really matter. The number that investors really want to know is the number of pre-orders that GTA 6 has right now, and Take-Two is not saying them. Take-Two has said that the number is unprecedented and exceptional and astounding. Those are all words that CEO Strauss Zelnick used,
yes.
But they're not saying the exact numbers, so all eyes are on November 19th for the launch day and the final sales figure.
I guess the idea is that the world will have an expectation of what that number would be, because we have a really good sense of what the prior GTA titles were able to achieve, right? We know the date, but give us the kind of backstory of why it's taken us so long to get to GTA 6.
Yeah, a couple of things. So GTA 5, the last game in the series, came out in 2013 and has since sold 230 million copies. It did really well on launch day, but a lot of those sales have come in the years since then. It was really a long tail, an unprecedented long tail for that game. And so the numbers that we're expecting here are going to be exponentially higher than the numbers we saw
is jumping by the most in 16 months after the company boosted its annual revenue forecast for a second time this year, citing robust demand in the US and also in Europe. Bloomberg's Natalie Lung is here. What do we need to know?
So Airbnb is seeing this really strong demand, especially from North America. Group travel is really strong. People are booking entire homes to go travel with friends. And, you know, it's really contributing to this growth optimism that Airbnb is seeing. It's kind of a different story from last year where they would always call out that North America is sort of the drag on the business. And another thing to call out is, you know, this kind of optimism would bode well for a lot of Airbnb's new business initiatives, like a la carte services, like in-home beauty appointments and grocery stocking, as well as their new, you know, hotel booking initiative as well.
So that's my question. What is Airbnb's technology story, right? Because you have to look past it being a short-term rental story right now.
Yeah, so CEO Brian Chesky is trying to turn his company into an AI-native company, using AI to help people discover homes more quickly, make a decision on the reservation more quickly, and basically convert them into bookers. So upcoming features later this year include AI search, which will be more conversational with more visual elements than your traditional chatbot. The other thing is like an AI home comparison tool that they're testing. So that's what we're going to expect from them in the coming year.
Bloomberg's Natalie Lung, thank you very much. Coming up, Lyft CEO David Risher joins us to discuss his company's earnings and its global expansion efforts. That's next. This is what markets look like. There has been a sharp slowdown in US jobs market. Technology stocks are higher. There is outperformance in semiconductors. Bond yields are falling. And it's all about the idea that interpretation from the market reflects that the Fed will not be forced to raise interest rates anytime soon. Pretty good economic sum. It's halftime. This is San Francisco and Bloomberg Tech.
In alternative investments, the best opportunities aren't visible to everyone. As part of the world's largest bank, few can rival our ability to find, fund, and capitalize on opportunities across private equity, real estate, infrastructure, private credit, and beyond. Companies all over the globe trust us to fuel their growth, creating deep connections that keep us at the forefront of deal flow. And when you invest in alternatives with JP Morgan Asset Management, our access becomes yours.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with the close. Weekdays on Bloomberg. Context changes everything.
Some men just have it. It's not the car, the places he goes, or the moments he creates for her. It's the way he carries himself, the way he shows up, and doesn't need to say a word. She can sense it. It's not second guessing. It's knowing. I've arrived. Collars & Co. Presence starts here. Get 20% off today using code TV at collarsandco.com.
This is Espresso Evolved. Discover a new kind of espresso ritual, where each interaction inspires delight. Precision with a presence. To move espresso forward, introducing Fellow Espresso Series 1. There's a power within each of us. When awakened, it can boost performance, enhance learning, even help you work smarter. And you can unlock it with one simple thing: better sleep. Saatva provides that with our luxury mattresses, handcrafted with premium materials in our American factories. We even deliver to any room in your home for free. Saatva, you deserve the comfort of a great night's sleep.
The average home collects 40 pounds of dust a year. That's where Sans comes in, designed to target dust before it settles, and the everyday pollutants hiding in your home, like dander, smoke, odors, allergens, and chemical fumes. Sans uses 3-stage HEPA filtration to capture up to 99.9% of harmful particles, so every breath you take feels cleaner, fresher, and healthier. Spend less time cleaning and more time enjoying your home. Try Sans risk-free.
Bloomberg Tech. It's a Friday where markets are being driven by economic data. Technology stocks are higher. We're up 1% on the Nasdaq 100, some outperformance in chip stocks, but very simply, there was a slowdown in the US jobs market. Not only are stocks higher, yields are coming down on treasuries, and the interpretation is that the Federal Reserve is not under sort of immense pressure to raise interest rates anytime soon. That is what's kind of happening in the here and now of the market. There are bigger and longer term considerations. BlackRock sought to raise debt financing for a metadata center, but there was one type of investor the asset management giant was trying to avoid, those looking for a quick profit. So it focused on real money accounts, pension funds, insurance funds, to avoid fast trading investors who can quickly tank a bond's secondary market performance. And so far the strategy looks to be working. Bloomberg's credit reporter Tassos Rosos is here to explain why. There is a lot happening. Basically, supply has exploded, and issuers have tried to reassure the market that supply is not going to overwhelm it. And in the middle, BlackRock's trying to manage that environment.
It's exactly that. I mean, we were here last month talking about how these bonds underperform in the secondary market because, frankly speaking, people are concerned. People are concerned that so much bonds are going to come into the market that they won't be able to absorb that many. And what banks are trying to do now, obviously, you cannot take away the AI build-up. That's the future. The market has actually agreed with that, so that has to be financed somehow. But what the banks are trying to do is trying to take away the risks out of the market as much as they can. As you mentioned, fast money accounts, those who buy the bonds, sell them straight away for a quick profit. We've seen it in previous months. They come to the market and the bond price tanks straight away. You have to take them out of the market. And then, of course, you have reassurance by companies saying, yes, we're going to raise $25 billion today, but we won't come back until the end of the year, as we saw yesterday with Alphabet.
Yeah, we covered Alphabet. You know, recently there have been several $25 billion bond deals, right? I think about Amazon, Nvidia, SpaceX. The main point is that there has been poor trading after that issuance. But the market still keeps going.
Indeed. It keeps going, but the concerns are brewing a lot. So Barclays, the big British bank, reached out to 300 investors, and they asked them, what do you believe is going to drive risk premiums across bonds of the hyperscalers? 60% of them said supply cadence. What they meant by that is the pace of supply. Bring too many bonds and the market's going to go berserk. 25%, which is like a distant second, was whether these the AI investment is going to play out. So there are two major risks in the market right now that investors have to digest. One is whether the AI promise is going to keep, which is a bit of a longer-term concern. The main concern right now, as we speak, is what people say, the supply and how you manage that. And this is what banks are trying to do, manage it better.
This is the story that everyone's been reading about this morning. Bloomberg's Tassos Rosos, thank you very much indeed. Back to tech earnings. Shares of Lyft higher. The company reported growing demand for premium rides. Also strengthening European markets. Super interesting and kind of the global expansion story. Lyft CEO David Risher is with us. There is a very specific data point actually that I'd like to start on, and that is that in markets, specifically San Francisco, where you have Lyft rides and Waymo rides, you said San Francisco grew 20% year on year. That's right. Explain the causal or casual relationship within that data point.
Yeah. So, you know, our industry is going through a big transformation, and it is sort of bringing on of these self-driving vehicles. Waymo, of course, is the market leader in that. Anytime you see a transformation like this, one or two things can happen. You can either see sort of a substitution, or you can see market expansion. And in this case, we're seeing market expansion. And it's not that surprising. When people take self-driving cars, they tend to like them a lot. They're a very reliable product. They're a nice private product. So you feel like you can have a private conversation. But at the same time, it doesn't seem to take away from people's interest in being driven by humans who can help with luggage or have a good conversation. Right. So it really is accretive.
This is a micro case study. It's one market, San Francisco. Yeah. But you know, the questions are: is Lyft gaining market share from Waymo in this city, or is it that this is an issue of supply? So because somebody cannot get into a Waymo within a